Minute to go until the start of cash equity trading here on the continent. Here are your top headlines from the Bloomberg terminal. Red hot growth. That's Warren Buffett on the U.S. He says the market is seeing almost a buying frenzy. We'll get the latest on the Oracle of Omaha's mistakes and predictions. No inflation issue. Treasury Secretary Janet Yellen is relaxed on inflation, saying she doesn't see President Biden's plans causing pressures on that front. And daily deaths in India hit a record. This is Prime Minister Narendra Modi's party loses an election in a key state, so the pandemic continues to rage there. Let's take a quick look at futures higher in the markets that will trade today. It is the May Day holiday, so the UK and some other markets are closed to trading, but we do see European futures higher. And let's take a look at the markets as they open up. Here's your global macro movers screen. It shows you a series of risk assets. The column on the left-hand side shows you equity indexes, and it'll populate as they open up. Typically, the FTSE is the first out of the gate, but we don't have the FTSE trading today. So we'll likely see either the CAC 40, the AEX, or the IBEX in Madrid pop open first. Sometimes the FTSE MIB in Milan opens first. There's the IBEX open up 0.1%. The DAX out of the gate up 0.4%. The CAC gaining 0.25%. So European equity markets now opening up, and they will rise, at least at the start of trade, with investors assessing inflation risks as economic activity ramps up back in the U.S. Billionaire Warren Buffett delivered his verdict on the state of the U.S. economy during Berkshire Hathaway's annual meeting, calling it red hot, and as we said, almost a buying frenzy. Joining me now to talk about all this and more is Daniel Lacaille, Tressis chief economist. Daniel, let's talk first about the Oracle of Omaha. I thought it was interesting. He said it's almost a buying frenzy, and people with money in their pockets are willing to pay the price. On two fronts, this is fascinating. Maybe valuations are a little high, and maybe inflation can be expected to pick up. What are your thoughts?
I do think that inflation is the biggest concern here, especially because what we're seeing is that inflation, for example, in food, if we look at commodities that are linked to the industrial activity, the rise is not just coming from the reopening of the economy. They're going up to levels that we have not seen in 5 years. And so, therefore, that is, to me, one of the important concerns. I disagree with Chairman Powell's comments about inflation being transitory. There are numerous elements of the inflationary pressures that look to be more sticky than what the Federal Reserve would likely want. And I would agree with Warren Buffett on the state of the U.S. economy, but it looks to me like a sugar high coming from the chain of stimuli. And my concern is in 2022. And I actually believe that he also shares a little bit of that in the sense that we will see a 2021 in which vaccination plus the stimulus checks plus the improvement in employment will elevate growth in the United States to unprecedented levels and recover the entire pandemic loss.
So, Daniel, how do you play this? I mean, you're not just the chief economist there. You've got to manage money at Tressis. You've got, it looks like a difficult timing situation, right? Because you see the momentum behind asset price increases now, but you're concerned about a crash from the sugar high next year. What do you do with your money?
Well, I think that we need to be invested, don't we? Therefore, I think that it's a great opportunity to reduce exposure to those sectors that are so-called value, because they don't protect you when there's a correction. They don't rise as fast when markets go up, and they definitely fall as fast when markets come down. So it's a good opportunity because they've had a phenomenal run. The difference between growth and value has shrunk significantly, and it's a good time because many of those companies will see margin pressure from higher inflation because they cannot pass the increase in cost to consumers. So I would reduce exposure to value. I would increase exposure to dollar assets. I would, at the same time, be exposed to agricultural commodities and to those parts of the energy chain that are not affected by supply overhangs.
Daniel, what we see in the U.S., I mean, President Biden is attempting essentially a paradigm shift, probably the biggest that we've seen since Ronald Reagan came into office, to bigger government and away from, the deregulated supply side economy that the Gipper gave us. I noticed, in the last few weeks, since we've heard of these spending and tax proposals, there really haven't been any so-called freshwater economists. There haven't been any Austrian school economists. There's no, in Hayek versus Keynes, we only have Keynes left in terms of the big prominent figures in the U.S. economy. Are you concerned that we don't have any pushback from the other side?
I find it certainly concerning. I start with the idea that even if you're a Keynesian economist and just looking at data, we know that more government spending in open and indebted economies generates a very low fiscal multiplier. This is not an opinion. This is a reality. We also know that the massive infrastructure plan has very little actual infrastructure in it. Therefore, the economic return of the plan is limited. And we also know that raising taxes, even if we decided to believe the optimistic expectations of revenues that the administration has provided, that those tax increases are not going to even scratch the surface of the deficit. So my concern is that we need to have a little bit more reality. I think that we see too much hope built into the plans, yep, which have merit in some cases, some important things that can be very defendable, push towards a more green economy, more yep, focus on education, which is fine. But we also have to understand that if you push towards a European type of model of high government and high taxes, the result is low growth and low employment. And we know that. That is not even debatable.
Well, Daniel, I remember during the great financial crisis, there was a great rap video, Keynes versus Hayek, that pitted the two against each other in a boxing match. And it looks like 10 years on, Keynes won that bout in a knockout. We're going to continue to talk about this. Daniel Lacaille, Tressis chief economist, stays with us. Coming up on, are we on the right track? Europe's vaccine rollout seems to finally be picking up. And it looks like the stimulus money or the recovery fund is going to start actually getting spent. We'll talk to Daniel Lacaille about this. This is Bloomberg.
now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the European Open. We are 10 minutes into the session right now and looking at gains across those indexes that are open. It is, of course, the May Day holiday in the UK, a bank holiday in Ireland, and many of the Eastern European markets are closed as well. But we do have the Western European equity indexes open. You can see the DAX up 0.4%. Let's take a look at what else is on the move this morning with Bloomberg's Danny Berger in London, also stuck working the bank holiday. Danny?
That's okay, Matt. I'm happy to do it. And especially when you have exciting stock movers, even though the UK is closed. It would be much harder if it were the other way around. But KPN, one of those exciting movers, falling today, down about 3%, rejecting not one takeover bid, but two takeover bids. One was from an EQT JV. The other one was from KKR. Jeffrey's talking about how they have rock-solid defense against takeovers. I also want to give you a check on EQT share prices, of course, which was one of the big private equity firms trying to buy KPN. It opened up more than 1%. Now it's down to 0.1%. So that's actually weighing on stocks. Often we see the acquirer do better when acquisitions aren't going through anymore because they tend to be costly. Finally, Lufthansa, one of the biggest gainers today. Those shares up more than 3%. Telegraph is reporting today that the UK government is likely to lift that foreign travel ban on May 17th. You'd assume if IAG was open on the London exchange, that would also be higher, but some optimism over some of these more long-haul carriers on what that could mean for them. Now, when it comes to the macro picture, it is lighter trading this morning with much of the UK off on bank holiday, but it's really that inflation debate, which is starting the week off yet again. We have Buffett talking about it, sort of contrasting with what Fed officials are saying. So we're looking at U.S. futures higher today. We're looking at a bid in the U.S. 10-year future as well. And just wanted to put Ethereum up here as well because that's been stealing the limelight, getting past that nice round figure of $3,000, taking up more share of the crypto trading, but Bitcoin also higher over the weekend, Matt.
All right, very interesting stuff to see how much market cap, how much share of the market cap Bitcoin is losing. At the beginning of the year, Bitcoin was 70% of all crypto's market cap, and now Bitcoin only makes up 46% of all crypto's market cap. So altcoins are gaining ground. Let's turn back to Europe right now. The bloc's belated vaccine rollout is finally picking up. That's as the EU has now given around 150 million shots out. Joining us is Maria Tadeo from Brussels. So Maria, has Europe turned a corner?
Well, Matt, you know, in many ways, when you look at the data, it does seem that it has turned the page on that very chaotic initial rollout. Now, if you look at distribution, Matt, it's doubling every month, and that's being reflected in the national figures. When you look at Germany, it's vaccinated around 1 million people for 2 days straight. So that does show that it's picking up in a way that is significant. The same goes for Spain and Italy. Both vaccinated more than 500,000 people on Friday. That was a first. And Emmanuel Macron said also last week that by June 15th, everyone who wants to get a vaccine in France that's over the age of 18 will have one. So a lot of this has to do with distribution. We know that there has been issues with AstraZeneca, but the partnership with Pfizer-BioNTech is working well for the European Union. There has been accelerated deliveries in April, and of course that mega contract that was announced of 1.8 billion doses with Pfizer-BioNTech. So all of this coming together does show that the vaccination campaign has gained momentum in the past few weeks. And I have to say, Matt, in my reporting, you know, just a few weeks ago, there was a lot of nervousness from European officials that we would not get to herd immunity, that Europe was really behind, but that has also changed. And they really now tell you that by the end of August, so that's a month before target, there will be 70% of adults vaccinated in Europe.
All right, Maria, thanks very much. Maria Tadeo out of Brussels on the vaccination push. Daniel Lakai is still with us, Tress's chief economist. Daniel, what are your thoughts on the European recovery? We note the vaccine rollout is now happening, and the European recovery package is finally starting to take form. We could see at least, I think, 13% of the money distributed this summer.
Yeah. I think that the most important part of the European recovery is the vaccine rollout. I think that if the pace that we are seeing right now, as Maria was mentioning, it's accelerated significantly in most European countries. That is going to be key to the reopening and to an improvement in the services sector, which continues to be extremely hurt. I think that the challenge in the European Union, even with the recovery fund, is the recovery of employment. We see that, for example, furloughed jobs remain very elevated, that unemployment remains very elevated, and that the recovery of jobs that is slow but steady in the United States is likely to be slower in the Eurozone in particular. So I think that, you know, it's good news in general, but the question is how much of it is already embedded in the estimates of recovery, the 5% recovery of GDP of the Eurozone, particularly the 2022. Because, again, the recovery fund is a good piece of news, but we have to remember the very low effectiveness of these types of programs. Remember the Juncker plan. Right. Remember the 2009 Jobs and Growth Plan.
Well, is this one to build on, though, Daniel? Do you expect more fiscal stimulus from Europe or recovery money from Brussels for the peripheral economies now that they've started selling euro bonds and working together like this to distribute cash?
Yeah, I do. I think that we're going to see that the example led by Draghi in Italy is likely to be followed into other economies. I think that the European Union is going to try this time to maximize all fiscal measures possible. And that is obviously something that we need to see in the long run whether it's going to work. I think that obviously the key is the vaccination and the reopening of the economy. You may inject trillions of liquidity and fiscal stimuli in the economy, but if you have everything closed, the economy is going to be in the doldrums anyhow. So my point is, I think that what the European governments would need to do is, and I think it's been wise to have a different pace of delivery of the recovery funds for the countries, so that it does not become a spend quickly and badly as we have seen in the past.
Daniel, this is the last year of Angela Merkel, and she has really been the leader not only of Europe, but in some ways of the entire G20. Who takes the reins after she's gone? I mean, is it a Draghi? Can it be a Macron? Is it less likely to be a Pedro Sanchez? Who helps to really run Europe in terms of the leaders of the country?
Well, I think that if somebody is shaping up to be the person that can lead the European Union to a next step, because of his knowledge of the fiscal and the monetary side of the economy, is Draghi. I think that Italy can surprise us quite significantly in 2021. I think that he has put together a very strong package in which not only the vast majority of investments do have real economic return, but he has also decided not to increase taxes, in fact, to cut taxes. So he has been extremely pro-growth. And I think that that can be an important driver of leadership for the European Union in a moment in which I think that the different candidates in Germany have almost a desire to find somebody else from another country that is going to lead the European Union in the next years. So it could be Draghi, it could be Macron, but Macron is probably more challenged by the internal difficulties in terms of acceptance and in terms of political support. But it can be both. I think that it's all about putting the European Union in a growth mode in which investment generates real economic return and in which taxes don't remain as elevated as they are.
Daniel, it's been great getting some time with you today. Thanks so much for joining us and giving us your insight. Daniel Lacaille there, Tressa's chief economist. He's going to continue the conversation with us on Bloomberg Radio, by the way, at 9 a.m. UK time. So if you're in London, tune in on DAB, digital radio, anywhere else, just bloomberg.com/radio or RADI on your Bloomberg terminal. Coming up, an epic fight, Apple's high-stakes antitrust battle with the maker of Fortnite kicks off today. We look at just how much the tech giant has to lose. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
and Epic Games are entering a trial that could impact the heart of Apple's App Store. The 15 to 30% fee that the iPhone maker takes from developers who charge for paid App Store downloads as well as in-app purchases and subscriptions. This matter kicked into high gear when Epic replaced its payment system inside of its popular game Fortnite with its own payment system. That circumvented Apple's in-app purchase system, which takes the fee. That, of course, led Apple to remove Fortnite from the App Store. Hours later, Epic sued Apple, and here we are today. Olga, you cover Epic Games. What's their argument in this trial, and how do you think they'll fare?
So Epic argues that Apple has monopoly power in the iOS app distribution market. It argues that Apple locks developers into selling their iOS apps only through the App Store, and it forces developers to use its own payment functionality, and Epic would like to change all of that. Epic founder Tim Sweeney is going to testify and say this is unfair, and Epic is going to have a slew of witnesses, such as economists, who are going to say that Apple is just greedy and is, trying to take developers' money away from them. And a lot of legal experts say that Epic has a fair shot at winning, but even if it loses, it will probably win mind share of a lot of developers and consumers. And Mark, how do you see the Apple side of the story? Sort of what are Apple's arguments and what are their chances of winning?
Yeah, I mean, Apple's perspective is essentially twofold. One, there is a contract in place. So no matter how a developer feels, no matter how we feel or Epic feels about the situation, Epic, for all intents and purposes, does have a contractual agreement with Apple for that 15 to 30% cut that Apple takes from all other developers. So that alone, I think, gives Apple a potential leg up in this lawsuit, given the presence of contracts. Secondary, Apple says that their 15 to 30% cut is either lower than the industry average or is on par with the industry. Of course, that's arguable. There's a corner of people who say that the industry is only at that tier because Apple set the tier when they launched the App Store 10 years ago. But however, for Apple, there are billions of dollars at stake. Apple made an average of $120 million per year between 2018 and 2020 on revenue share from Fortnite alone. Right? If Epic wins, or if Epic does make a solid argument in court and does develop developer mindshare, like you said, Olga, the floodgates could potentially open for other developers to have a backlash against Apple, sue Apple, fight Apple in other ways. And Apple made an estimated $20 billion in fiscal 2020 off of commissions from the App Store. So that is a lot of money at stake for the iPhone maker.
That was a look ahead to the tech trial. Coming up, we speak to the World Health Organization's chief scientist about the raging pandemic in India. This is Bloomberg.
focus is odor detection. And this is because no matter how you're bound, what container you're in, you're still producing and releasing odors. And we're kind of building off of wildlife detection dogs.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Open. We are 30 minutes into the session right now, and we're looking at, on those indexes that are trading, some gains. You can see the Stoxx Europe 600 is up almost 0.5%. The DAX in Frankfurt is up about 0.7%. The CAC 40 in Paris up about 0.6%. Remember, it is the May Day holiday, so the UK and Ireland are closed for the holiday, as are many of the Eastern European indexes. But we got Laura Wright to come into work anyway, and she's here now with your Bloomberg First Word News out of London. Laura?
Matt, when I heard you were anchoring, there was no other decision I could make. But in the UK, pressure is mounting on Prime Minister Boris Johnson. He's under investigation over who paid for the refurbishment of his official residence. He's insisted there's been no wrongdoing, but it is hitting the Conservatives in the polls ahead of local elections. The Scottish Tory leader says Johnson should resign if he is found to have broken the rules. India's Prime Minister Narendra Modi has lost a key state election amid a voter backlash over his handling of the pandemic. Last month, he predicted his BJP would win more than 200 seats in West Bengal out of 292 up for grabs. In the end, it won just 76. Daily deaths in India hit a record yesterday. The country has become the first to top 400,000 cases in a single day. The billionaire owners of Manchester United faced a mass protest yesterday over their support for the failed Super League. Hundreds of fans gathered at the stadium, with dozens breaking onto the pitch to express their anger. It meant the team's match against Liverpool, also part of the breakaway plans, had to be postponed. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much. Laura right there with your First Word News. Always appreciate your work. Now, India's devastating second wave is setting daily case records and overwhelming hospitals as well as crematoriums. Asia's third largest economy is struggling to cope. The country has weak healthcare infrastructure, is facing an acute shortage of medical supplies, including doses, and its vaccination drive is crumbling. That's despite being home to the world's largest vaccine manufacturer. For more on what India should be doing to get this rapid surge under control, let's go to the WHO's chief scientist, Dr. Soumya Swaminathan. Doctor, thanks so much for joining us. Let me first ask what the state of the pandemic is. I know we had a reading of 400,000 new infections just a couple of days ago. It's come down a bit, but not enough. Is India headed in the right direction, or is it getting worse?
Yes, it's a grim situation. 1 in every 2 cases in the world is being reported out of India now. Of course, India with its vast population, the numbers are always high. But what is also worrying is that the test positivity rate is also increasing. So it's about 20% nationally, and it's over 30% in many states. This actually means that many people probably have the infection and are not being diagnosed or detected because despite scaling up testing considerably, it's still not enough to capture all the infected people. So the numbers, while very high, are likely an underestimate of the true numbers of infections. The priority just now is really to ensure that people who are infected get adequate care that they're properly managed and monitored, that those who need a hospital bed, especially with oxygen or other forms of ventilation, get access to that, and that those who can be managed at home or in community isolation centers or care centers can be managed at home. The scale is enormous.
The concern, doctor, is that that's not happening. The concern is that that's not happening, right? I mean, it's proving incredibly difficult, even for people who have previously had privileges to get that kind of access at hospitals, to get on ventilators, to get oxygen. What can be done in order to meet this crisis?
Yes, the oxygen supply increased suddenly, and, you know, big cities like Delhi were caught unawares. I think there's a huge effort going on now to make sure that the oxygen that's being produced in factories around India can be transported easily. There's a lot of international help that's gone in transporting both large-scale oxygen concentrators that can be set up in hospitals and care centers, as well as the internal coordination, I think, is improving. So we should see, hopefully in the next few days, an alleviation of the problem of oxygen supply. But yes, health systems have been strained. Doctors and nurses are working, you know, non-stop, and the shortage of supplies is making it difficult. But I think the problems have been identified, are being dealt with. WHO is also helping to set up mobile hospitals, as are other agencies that are working, so that people can be triaged and taken care of at, you know, different levels where they get medical care, but they don't necessarily have to all crowd into the tertiary hospitals.
When do you expect infections to peak, or where?
Well, it's very hard to predict. It's a heterogeneous epidemic in India because it's such a huge country, and we've seen that the peak in the western states like Maharashtra has actually flattened over the last week or so, because it started earlier, but we still have large parts of the country with susceptible populations, people who do not have immunity against this virus, where it could spread. So it again depends on the actions that are taken now in terms of implementing stricter control measures for people's movement, to prevent gatherings, to really cut down on people mixing, being able to mix with each other. And there are about 200 or so districts where the test positivity rate is already over 10%. And I think we need to focus really on those districts and bring in some strict measures to prevent the virus from being able to transmit from one person to the other. Because on the one hand, we have to take care of those who are already infected, but we also need to turn off the tap so that new infections are reduced considerably.
What can India do? You've talked to us about what needs to be done in terms of immediate steps, but what about longer term to prevent future health crises like this?
Unfortunately, yes, many countries have learned, a painful lesson that when this epidemic starts increasing exponentially, it's just absolutely difficult to cope. We've seen this in country after country over the last 16 or 17 months. So I think they need to do a few things. One, of course, is going to be the focus on ramping up vaccination. And that is already happening across the country. The bottleneck there is the supplies. If there were more supplies, then India has the capacity actually to vaccinate many more people significantly. There's a large network of immunization. There's a very good immunization program. There's also a large network of private centers and hospitals that have pitched in. And so vaccination could be scaled up if India got hold of more vaccines at this point of time. Like the rest of the world, we're all facing the supply-demand problem here for vaccines. The other thing, of course, in the longer term is to strengthen health systems, both in terms of human resources, in terms of infrastructure and resilience, in terms of being able to monitor and predict by surveillance, what's coming down the line and take early action, setting up public health cadres in every state. There are a few states in India that have a specialized public health cadre, but this should be the case everywhere with epidemiologists at the district level and people who can understand, what outbreaks look like and what needs to be done.
Doctor, are there risks that other developing nations who look to have escaped a first wave could see similar crises, similar jumps in infections, and these tragic, horrendous, overflows of the healthcare system, for example, in Africa?
Yes, there's always the risk because the virus is everywhere and it's just waiting for the right conditions to start, increasing its footprint and growing in the population.
But where are your biggest concerns?
Well, concern is everywhere, but I would say biggest concerns are really in the countries which have very rudimentary health systems and which cannot cope. So large parts of Africa, but also countries in Latin America where we have seen terrible scenes, being played out. In Africa so far, it has been sort of under control. But I would say that the data on cases and deaths from many, many countries is just not robust enough. So we cannot just go by the reported numbers. When sero surveys have been done, when post-mortem studies have been done, the actual number of infections in the population have been found to be much higher than the cases reported. So I think Africa really needs to take action now to prevent what's happening in India. And for example, one of our focus areas now is oxygen. We have an oxygen task force that's been created globally with lots of partners where we're really saying that this is a life-saving medicine and there's a shortage in many countries. And if we can focus on just that one thing, getting enough oxygen, training healthcare workers how to use it appropriately, that can save lives, not just from COVID, but also from pneumonia that still kills, huge numbers of adults and children worldwide.
All right, Doctor, thanks very much for your time. I know you have a lot to do, so I appreciate you giving us a few minutes. Dr. Soumya Swaminathan is the chief scientist at the WHO, talking to us about this, the continuing pandemic, but really the tragic situation that's developed in India and could be developing in Africa and parts of Latin America as well. Coming up, we're going to get back to markets and talk about the Bitcoin's the Bitcoin dominance of crypto, or really the lack thereof. In fact, it's lost ground in terms of market share among total crypto market caps as Ether and other altcoins soar. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty
extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
In the late 1960s, the average white family had 5 times the wealth of an average black family in the U.S. By 2019, that gap grew 7 to 1. Today, black Americans hold less than 4% of the $116 trillion in U.S. wealth, with homeownership accounting for a lot of that shortfall.
It goes back to redlining. Banks and government agencies for many years gave out the riskiest ratings to predominantly black neighborhoods, keeping many families from getting affordable loans for their homes or for their businesses. But despite fair housing laws, racial disparities in home ownership, it's worsened in the last 25 years. At the same time, the gap in home values in white and predominantly non-white neighborhoods has increased. Then there's the gender pay gap. While economic disparities for women have narrowed since the 1970s, the gains have been slow, and they remain precarious. During the COVID-19 pandemic, women, particularly women of color, have been hit hard by job losses in services industries. Many women have been pushed out of the workforce entirely. The number of women who want jobs but say that they're not seeking work due to family obligations, that's more than twice as high as comparable statistics for men.
These gaps have an impact on millions of people, and they take a dire toll on the broader economy. Bank of America says that with gender parity, global GDP could increase by $28 trillion by 2025. Unfortunately, at the current rate, it will take more than 250 years to close the economic divide. Meanwhile, in the U.S. alone, Citigroup estimates that the racial wealth gap has cost the country an estimated $16 trillion in lost economic output over the span of 2 decades.
You can watch our Bloomberg special on money and equality this weekend, and you can find it, of course, online at Bloomberg.com. Now, Bitcoin's domination of the overall market value of cryptocurrencies is declining, and that's happening rapidly this year as the momentum of Ether and other altcoins is drawing increasing interest among investors. Joining us now with more on this story is Bloomberg's global markets editor, Joanna Ossinger. Joanna, what exactly is happening with Bitcoin relative to other cryptocurrencies? Because the move has really been dramatic. I think it was 70%. I read in the BN story this morning at the beginning of the year, and now Bitcoin only represents 46% of total crypto market cap.
Right. Other coins have really caught up with Bitcoin. And of course, Bitcoin did so well, and it's for years now, it's been what everyone thinks of as crypto. But now that people are starting to really be familiar with the asset class and say, okay, I'm in Bitcoin, or I'm looking at Bitcoin, what else is there? They're looking at things like Ether, the #2 currency. They're even looking at Binance Coin and Dogecoin, which started out as a joke, but now it's soared this year.
All right, so why has Ether been so popular in particular? Doge I get, right? Because it's a fun joke and because it's super cheap. Anybody, can go in and buy it, and so anybody has. And of course, you can right. use it to go to Mavericks games, which is also awesome. But it's only in quotes worth $50 billion in total market cap. Ether has been really on fire, right, Joanna? What's behind Ether's gains?
So Ether has come along as decentralized finance, which is kind of just new ways to get into the financial system. That's become popular in the past year or so. Also, those non-fungible tokens where you can buy digital art, a lot of that is based on the Ethereum network. So Ether is kind of a useful token to have. It's sort of like something that the programming types really like, and it is second to Bitcoin. So if you're looking at diversifying in crypto, Ether is the next really obvious place to go. And so it's about quadrupled this year, and it just hit above 3,000 today.
All right. right, Joanna, thanks very much for joining us on the crypto story, one we're going to be talking about all day. So really appreciate your insight there. Joanna Ossinger, Bloomberg's global markets editor, on really the boom in altcoins and the recession of Bitcoin in terms of its market share of total crypto market cap. Coming up, when are price pressures a problem? We'll look at the great inflation debate with Bloomberg's MLive's Ven Rom. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We've all learned from the pandemic in terms of that we can actually work from home and work from the office, and it will always be a combination going forward.
We're very keen going forward, actually, to make it easier for employees to have a balanced in the office, at-home work environment.
It'll really be up to the employee, but in a structured way with the manager.
We will see a hybrid way of working in the future, where the office is the place to meet and interact and be creative, and then you can work at home for some of the quiet time and the quiet work.
I don't think you'll see a strict mandate from Barclays saying you have to be in from this day to that day. And I think we will rely on flexibility.
We're committed to a hybrid-based working environment for the long term. We think this is the future.
Some of the C-suite voices we've spoken with during earnings season on the future of offices and working from home. The times they are a-changin'. Joining us now is Ven Rom, Bloomberg's MLive currency and rate strategist. To focus in on inflation, Ven, you've posted a piece on the blog, and I think it's really interesting because of, on the one hand, the comments we've heard from Warren Buffett over the weekend saying, basically, it's almost a buying frenzy out there. Anybody with money in their pockets is willing to pay the price, pretty much whatever that might be. So it looks like inflation from Berkshire Hathaway's point of view is here to stay.
the times they are changing, as you said, Matt. I mean, definitely, and that seems to be the case, central point from Warren Buffett and co. over the AGM that we heard. They're saying that they are seeing much more inflation than anyone anticipated 6 months ago. But if you flick back to the policymakers, Janet Yellen and Powell, they seem to be saying that, look, I mean, the markets may be fearing higher inflation, whatever rate you look at, whether it's the forward inflation swaps or break-even rates. But, the policymakers seem to be saying, we have seen what inflation was in the longest post-war expansion before the pandemic struck. And they're saying we are skeptical it's going to roll back. We are willing to let the economy run hot for a while before we get concerned about inflation. And the essential translation of all that they are saying is that don't expect us to move toward a taper of bond purchases just yet. We are in no hurry whatsoever. Matt?
I wonder what you think of the old adage, Ven, sell in May and go away. Certainly it's been applied to equities, but commodities as well. In fact, I read on the MLive blog this morning that in the 10 years prior to the pandemic, May was the worst month for commodities prices of all 12 each year. Is May set up to be a weak month for commodities this year as well?
Well, I don't know about these rotational plays. I'm slightly skeptical of these rotational plays and calendar trades, Matt, if you ask me. I mean, if you look at gold, the start that gold has had to the month, I think it's, it augurs pretty well. And at least for gold, it comes down to real rates, I would say. But in general, I think that the markets have grown more sophisticated, much, much more sophisticated than they were in the 80s, 90s, and the early 2000s. And the depth of trading that means that all the investors are aware of these calendar anomalies, so to speak, and therefore they are willing to take the other side of the bet. And these things are never predictable, and I don't think those calendar anomalies are here to stay. Matt?
I'm very skeptical as well, Ven. I just wanted to confirm my bias there with you. Ven Rom, Bloomberg's MLive currency and rate strategist. That's it for the European Market Open. Surveillance Early Edition is up next. Youssef Gamal Al-Din will join you, and then I'll be back with Kaylee Lines. As markets rise, U.S. futures are higher as well. This is Bloomberg.
Why did you decide to become Secretary of Commerce? Because in Rhode Island, you're the 800-pound gorilla because you're the governor.
Because I wanted to be on the team that helps America build back.
We've all learned from the pandemic in terms of that we can actually work from home and work from the office.
We're committed to a hybrid-based working environment for the long term.
It'll really be up to the employee, but in a structured way with the managers.
This is Bloomberg Surveillance, Early Edition.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Yusuf Gameneddin in Dubai, filling in for Francine Lacroix. And here's what's coming up with today's program. The creep of inflation. Warren Buffett says the U.S. economy is red hot with something close to a buying frenzy. Meanwhile, the CEO of Intel's weighed in as well, and he sees a chip shortage that's going to persist for a couple of years. Treasury Secretary Janet Yellen says Joe Biden's infrastructure plan will not cause inflation pressures as the investment is spaced out over the next decade. And the Bitcoin boom is surpassed by the explosion in Ether and alternative cryptocurrencies. The largest digital coin now accounts for less than 50% of the total crypto market. Let's get more than on our top story. The Oracle of Omaha says that growth in the United States is red hot and that the markets are seeing something of a frenzy. Warren Buffett spoke this weekend about the outlook for the American economy and told some of the key points about his own investments. Danny Berger has more on this. So Danny, Mr. Buffett then controversially weighing in on some of the hot topics of the week.
Yeah, that's right. And really in this inflation debate, taking a very different view than the Fed. And look, he's always very bullish America, so it's not strange that he talks about the American economy recovering, it being red hot. But of course, what differentiates his thoughts here is him talking about people having a lot of money, willing to buy anything at any price, saying it's almost like a buying frenzy, and that companies, and Berkshire is included in this, are raising their prices. So less sort of transitory about his view on inflation, more so that it is here and it's sticking around.
And then there's a relative evil, perhaps, in his view around SPACs. Why is that?
Yeah, well, I mean, he talked about SPACs, he talks about the retail investor, so a lot of sort of the hot, bubbly sort of topics, but his concern with SPACs is when it comes to Berkshire's ability to find deals. So exactly what he said it's a killer, that it won't go on forever, but it's where the money is now, and Wall Street goes where the money is. So he's seeing that when he's going out, he's trying to buy deals, that you have these SPACs coming in, they're making splashy acquisitions, and so it's harder for Buffett, the bargain hunter, to go in. He can easily be outbid by these SPACs. So Buffett hasn't had a lot of acquisitions, hasn't had a lot of deals over the past year or so. So he's pointing to SPACs here as one of the big reasons why.
And what did Buffett say about his own businesses and investments? I mean, one of the key things are building price pressures, right?
Yeah, exactly. So that's key in terms of his businesses, those price pressures, and in terms of what they're buying and selling. He did issue sort of a mea culpa. He talked about the fact that in the first couple weeks of the lockdowns, he had questions about why weren't you going in and buying things at depressed valuations? And he says, look, this wasn't a great moment in Berkshire's Hathaway. They sold a lot in the beginning of the pandemic and throughout. So he talked about his regret selling airlines, for example, which rallied really rallied through May up until the end of the year. His regret selling Apple as well, which has also rallied. So he did admit some of their mistakes in selling those types of assets, Yusuf.
Thank you very much for that. That's Danny Berger there. Let's widen out the conversation, because while Warren Buffett warns of creeping inflation, The U.S. Treasury Secretary Janet Yellen batted away concerns over price increases. She said that the spread-out nature of President Joe Biden's stimulus proposals means inflation pressure is unlikely to be an issue. U.S. Commerce Secretary Gina Raimondo said that the proposals were absolutely necessary.
The investments that the president is calling for in infrastructure, in broadband, in job training, in basic research are absolutely vital for American businesses to remain competitive and necessary, and have been delayed for far too long.
Joining us now is Esther Reichelt, Commerzbank FX strategist. Esther, I look at the comments from Warren Buffett, from Robert Kaplan, many others, and the expectations for a tapering are beginning to increase. Could we get something as soon as the June FOMC? I mean, that would appear to make the most sense.
Yeah, but that would be highly surprising because at its April meeting, the Fed didn't change its stance at all. They stressed once again that it is too soon to talk about interest rate hikes, and that before they taper their asset purchase, they are going to want to see further progress towards their inflation stability goal or price stability goal, and in particular also further improvements at the labor market. And I think now starting a tapering in June will be far too soon, because the Fed also said that they are going to signal this decision far in advance, and this so far didn't happen yet.
Esther, when I was looking through your research, what stood out to me is that you say, you know what, it's going to be inevitable. We're going to see U.S. Treasury yields rise. I wonder whether you're in line with sort of where the Bloomberg consensus is at around 1.8% by year end. Just give us a bit of a range around expectations.
That's at this 1.8%, that's definitely easy to achieve, but that doesn't mean that this is necessarily positive for the US dollar, because there are several reasons why yields could increase. This could be like a liquidity issue as soon as tapering becomes an actual topic. However, this could also be concerns about the US debt, and this would of course not be US dollar positive. So, if you want to look at what this yield increase means for US dollar, you have to be much more cautious.
In terms of how that translates to some of your conviction calls, we just had some Euro area PMI data out, the red headline hitting the Bloomberg. This is for April manufacturing, your PMI at 62.9. The preliminary was at 63.3. So from strength to strength, a lot of the other houses have already started upgrading some of their euro dollar forecasts. I mean, Citi sees the euro reaching 125 to 127.5 by year end. Are you also on the same page there?
Yes, we are also expecting higher euro dollar levels towards year end. However, you have to be a little bit cautious there. I mean, yes, Eurozone economy is improving, but as soon as we, approach these levels around 123 in January, the ECB got very nervous and started intervening, at least rhetorically, against euro dollar strength. So yes, as Eurozone economy improves, the ECB is going to feel a little bit more comfortable with higher euro dollar levels. But I doubt that too high levels at year end will be allowed. Let's say will be allowed by the ECB, because the recovery is still going to be fragile towards year end.
Yeah, how much of that view is tied to the potential weakening of the greenback? Lombard Odier says that the greenback is as much as 10% overvalued. Is that a fundamental component of that outlook?
Absolutely. It's actually the biggest driver, because the higher euro dollar levels are not going to be triggered by euro strength. There's simply no reason for that, as the ECB won't even think about normalizing over the next 2 to 3 years. So it's all driven by US dollar weakness, as we believe that this pick up in real economic activity, in inflation, is not going to carry towards the second half of the year or even further, because the stimulus measures, at least the ones we have seen so far, are basically only triggering a sugar high.
Esther, hold that thought. We still have a lot to cover. That's Esther Reichelt of Commerzbank stays with the program. Let's get you a bit of a snapshot then of what else is on the show as Bitcoin's crypto dominance declines in favor of alternative coins. We're going to discuss whether it's normalization or another case of market mania. But up first, we get into the emerging market currencies with Esther Reichelt as the COVID-19 situation remains dire in India and China sees a slight slowdown in its recovery. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
A big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Yusuf Gameneddin in Dubai. Well, let's get to the Bloomberg First Word News now with Leanne Gerrans. Hey, Leanne.
Good morning, Yusuf. The U.S. has denied deal to lift sanctions on Iran and swap prisoners. National Security Advisor Jake Sullivan told ABC there is still a fair distance to travel for an agreement. Separately, Iranian state TV says the UK has agreed to pay a long-standing £400 million debt that is to secure the release of British-Iranian Nazneen Zaghari-Ratcliffe, but a lawyer says he isn't aware of any such deal. Now, India's Prime Minister Narendra Modi has lost a key state election amid a voter backlash over his handling of the pandemic. Last month, he predicted his BJP party would win more than 200 seats in West Bengal out of the 292 up for grabs. In the end, it won just 76. Daily deaths in India hit a record yesterday. The country has become the first to top 400,000 cases in a single day. The billionaire owners of Manchester United faced a mass protest yesterday over their support for the failed Super League. Hundreds of fans gathered at the stadium, with dozens breaking onto the pitch to express their anger. It meant the team's match against Liverpool, also part of those breakaway plans, did have to be postponed. And Elon Musk's SpaceX has successfully returned 4 astronauts to Earth, ending its first ever regular crewed mission to the International Space Station. The Dragon capsule splashed down in the Gulf of Mexico, ending a 5-month mission. It cements SpaceX as NASA's only commercial partner so far capable of ferrying humans into space. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Yusuf.
Thank you very much for that. Let's get to another developing story. China Huarong is seeking to reassure investors over its credit crisis. After weeks of silence, the state-owned manager said that the firm is prepared to make its bond payments and state backing remains intact. The company's vice president said that the ratings downgrades by international agencies were, quote, too pessimistic. This comes as Chinese manufacturing and services data showed a slip in April, indicating the pace of economic recovery may be slowing. Esther Reichelt of Commerzbank is still with the program. Esther, given the significance of Huarong to the credit markets in China and around confidence in policymaking, how do you look at this story from the prism of the Chinese yuan and from the FX space in emerging markets?
Yes, I think this is one of the maybe first signals that are supporting the case for a weaker yuan going forward. Because as I said, like the pace of recovery is slowing down. You could even talk about like a normalization of the recovery. And now these structural weaknesses come back to the forefront again. And the whole credit issue is definitely a huge topic there. So I assume that we are going to see or going to hear more of these bad news on the credit front going forward. And this is, of course, an important burden on the renminbi.
So would you say that unless the Fed comes up with a surprise, there are more reasons for Chinese yields to rise than there are for them to come down?
Yes, definitely. I mean, of course, the overall global background is going to be important there. Like if the global recovery slows down for some reason, surprisingly, the Chinese government might continue its stimulus a little bit further. But in general, it looks as if yields in China will have to increase. But this won't be sufficient to support the yuan.
In the meantime, we also had some data out from Turkey. Since we're talking about emerging markets, the April core consumer prices rose 17.77% this year. Another new central banker, more pressure to deliver on policy credibility. But you're saying that Turkey's gearing up for a perfect storm, and it has been the source of a perfect storm for EM, and not too long time ago.
Yes, I mean, like if you look at the monthly pickup in prices, this annualizes to about like annual inflation of 20%. We have currently a key rate of 90% in Turkey. And so we are already back to a negative real rate territory. This is not going to be sufficient to support the Turkish lira. And it's basically a no-brainer that the CBT could hike interest rates. This is not going to happen. The big question is rather whether they are going to cut interest rates sooner or later. And we think that as soon as this is going to happen, the Turkish lira will crash again.
Where could there be upside in emerging markets then? If the lira is going to feel the pain, right? If there's the uncertainty on that front, where could there be some upside surprises in the coming days?
In the coming days, it's maybe going to be difficult. I think the overall, or the big thing emerging markets will have to hope for is actually that the Fed is not going to normalize its monetary policy too quickly, so that they are going to stick to its expansionary stance going forward, which means, of course, also that the inflation pickup in the United States proves to be temporarily indeed. So I think this is, if the United States turn and are considering tapering soon, and even then rate hikes come into sight, this would be devastating for the emerging markets at the current stance.
Esther, it's been great catching up. Thanks for stopping by. That's Esther Reichelt, Commerzbank FX strategist.
Thanks.
Coming up, the EU has given nearly 150 million doses, but it still lags behind the US and the UK. The European People's Party leader tells Bloomberg the India travel ban is completely necessary. We're going to be discussing the EU's fight against COVID live from Brussels. That's up next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Millions of Indians around the world are watching in horror as India reaches record numbers of COVID-19 infections. Ankur Chandra, a New York resident, struggles to find ways to support his relatives overseas.
Then we learned a 32-year-old kid in our apartment complex passed away from corona. It happened 2 days, gone. His mother is sick. Then one of our first cousin in another part of the city, he got really sick, relatively young, and he was on ventilator, and then he passed away. Then I was like, man, this is getting serious.
As the death toll rises to more than 200,000 deaths, the 4.2 million Indian Americans that make up the diaspora can only help from afar due to the Do Not Travel advisory issued by the State Department. Many of them can only wait for bad news to reach them through a barrage of WhatsApp messages, a call, or a social media post.
It will affect families, I agree, because the India diaspora is still having where a lot of people immigrate into the United States, but not, the parents are still back in India. Somebody's wife is still back in India. So, so there's still that disconnect, on that. And before COVID, people were traveling back and forth and visiting each other, but now it's become very difficult.
Images of hospitals overflowing with the sick and dying are flooding social media, as medical staff and public alike make desperate appeals for oxygen supplies. In the UK, British Indian communities took part in a 48-hour bike relay covering the distance from London to New Delhi in an attempt to raise money to help with the COVID-19 situation in India.
I think as British Indians, it's been quite distressing for us to see what's been going on at home. And of course, we can't be there physically in the time we're in at the moment. And due to that, we're just doing our little bit away from home.
I guess it can't escape me that there's quite a lot of a dire situation in India right now. As an Indian, I've got friends and family who are in India. I cannot do anything for them directly. So, it's an opportunity to do something by cycling. So, certainly, raise some good money, which I didn't expect.
In the grand scheme of things, you feel very helpless, and you evaluating and watching everything by the minute. And you can call your parents, call your loved ones to see how they're doing, but there's only so much you can do right now. If they get sick and if beds are not available, or if the oxygen is not available, what can you do right now? So that's always on the back of your mind right now.
As life in the UK and the US edges back to normal, the unequal access to vaccines is also becoming more evident for Indians abroad. Only 2% of the people in India have been fully vaccinated, compared with the 30% in the US and 21% in the UK, according to the Bloomberg Vaccine Tracker.
We were reassured, like in January, February, corona is almost over, so people, took their guards off. So that is the most frustrating thing, that after 1 year, we still have to call all the countries to please send aid and everything when we were saying we have enough. That's the most frustrating part.
Those were some of the stories from the Indian diaspora. Millions of Indians across the globe are struggling to find ways to help their relatives overseas as COVID-19 ravages the country. Another couple of updates from the markets. We're seeing German bonds on the move. Their 30-year yield climbing to the highest level since July of 2019. The 2-year as well on the move. The Euro bonds in general shrugged off some of the weaker than forecast PMI numbers. So you're seeing French, Belgian, Austrian yields all above last week's highs. We understand that traders are unwinding some of the haven buying amid thin liquidity. In terms of other global markets, key indicators from the S&P 500 mini contract, U.S. equity futures been accelerating higher here as you start off your Monday. We were a little bit lower on the liquidity, and we will remain so because you've got holidays in Japan, in the UK, and in China as well. But nonetheless, at the moment, we are geared towards a positive open as more earnings trickle in over the next few days. We're going to break down all the angles from the mainstream world and also from Bitcoin and beyond. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The creep of inflation. Warren Buffett says the U.S. economy is red hot with something close to a buying frenzy. Meanwhile, the CEO of Intel weighed in as well. He says the chip shortage will persist for a couple of years. Treasury Secretary Janet Yellen says Joe Biden's infrastructure plan will not cause inflation pressures as the investment is spaced out over the next decade. And the Bitcoin boom is surpassed by the explosion in Ether and alternative cryptocurrencies. Largest digital coin is now some 50% of the total crypto market. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Yusuf Gameneddine in Dubai. Francine Lacroix has taken the day off, so I've jumped into the seat. Let's get to the story around rich Americans. So faced with the prospects of higher capital gains taxes, they may turn to the booming ETF industry. Strategists see more cash fleeing to the tax-efficient vehicles in the months ahead. Joining us now to break all of this down is Danny Berger. Danny, so what is it about these ETFs that make them so attractive if higher taxes are passed?
Well, they are extremely tax-efficient vehicles, and Yusuf, this really is one of the big drivers of why ETFs have outdone mutual funds in terms of cash flow over the past few years. I mean, this is probably responsible for hundreds of dollars of inflows. Basically, the way ETFs work in terms of creation and redemption, and when investors want to sell their trade, they can really more so control when they see the capital gains taxes. So they have that aspect of it, and there are just just less sort of cash transactions that lead to those type of taxes. So the thought that analysts are saying now is that, yes, President Biden's tax plan is in its infancy. However, we'll see more people going into ETFs to try to take more control of capital gains taxes and perhaps avoid any new ones that are coming on. Just a little bit of skepticism to throw into that. One analyst we spoke to said, look, it's unlikely that we'll see a bunch of people sell out of their mutual funds because that in itself would be a tax event. So it'd be a little strange if in trying to avoid capital gains taxes, you come across a bunch by selling them. So Yusuf, this might just be a case of in the years to come when people are putting new investments in, they opt to do it via ETFs versus mutual funds. Again, as I say, this is already a trend we've seen since ETFs were created, so likely to just be accelerated.
Danny, thank you for that. That's Danny Berger. Let's get to Bitcoin now, because the domination of the overall market value of cryptocurrencies is declining. That's as Ether and other tokens are drawing increasing interest among investors. The largest digital currency now accounts for about 46% of the total crypto market. That's down from roughly 70% at the start of the year. And while proponents see this as a sign of broader acceptance of virtual currencies, critics say this could be nothing more than stimulus-fueled mania. Joining us now for more is Bloomberg's Global Markets Editor, Joanna Ossinger. Joanna, what exactly then is happening with Bitcoin relative to these other cryptocurrencies? What's driving that reshuffle?
People have known about Bitcoin for a long time now. And so we have had institutions going into it. We've had some big name investors endorsing it. But that has peaked to some extent, and it's still not, Bitcoin is still not where it was in mid-April when it hit its record. However, as people look at crypto, they say, well, let me look at these other coins. And there have been some that have really big gains. You know, even Dogecoin, which was started as a joke, and now it had this amazing run. And Ether, a lot of interesting things are happening with it. Binance Coin also. So you have alternatives. As people get more comfortable with the idea of crypto, they're looking at other things too.
And then why is it that Ether is doing so particularly well compared to some of the others?
Well, first of all, it's kind of the next best option, right? It's stable. It still has a high market value. So it's something that's relatively stable and less risky than some of the other smaller ones. But it's also undergoing upgrades. It's going to see a supply cap that, or a lower supply that will probably help boost the price as well. And you have things like DeFi, things like these non-fungible tokens where people can buy digital artworks. A lot of that is based on the Ethereum network. So there are a lot of kind of underlying things that are really helping Ether do well.
I have to leave it there. Thank you very much. That's Bloomberg's Global Markets Editor, Joanna Ossinger. We've got some breaking lines into the Bloomberg. Our red headline on the terminal. This one around Hong Kong GDP. It's out for the first quarter, and it's out with a big beat, an expansion of 7.8% year on year. The market had anticipated a number, almost half of that, so 3.7% going into this. There was always an expectation that the number would come in quite impressive. Some of the initial expectations that we've gathered. The Financial Secretary said in the Legislative Council last week that he expects quite a strong number thanks to the strong performance in exports and the low base from a year ago. So Hong Kong GDP coming in much stronger for the first quarter than what the market had anticipated. Let's give you another preview then of what else is coming up. An epic fight. Apple's high-stakes antitrust battle with the maker of Fortnite kicks off today. We look at just how much the tech giant has to lose. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Apple and Epic Games are entering a trial that could impact the heart of Apple's App Store. The 15 to 30% fee that the iPhone maker takes from developers who charge for paid App Store downloads as well as in-app purchases and subscriptions. This matter kicked into high gear when Epic replaced its payment system inside of its popular game Fortnite with its own payment system. That circumvented Apple's in-app purchase system, which takes the fee. That, of course, led Apple to remove Fortnite from the App Store. Hours later, Epic sued Apple, and here we are today. Olga, you cover Epic Games. What's their argument in this trial, and how do you think they'll fare?
So Epic argues that Apple has monopoly power in the iOS app distribution market. It argues that Apple locks developers into selling their iOS apps only through the App Store, and it forces developers to use its own payment functionality, and Epic would like to change all of that. Epic founder Tim Sweeney is going to testify and say this is unfair. And Epic is going to have a slew of witnesses, such as economists, who are going to say that Apple is just greedy and is, trying to take developers' money away from them. And a lot of legal experts say that Epic has a fair shot at winning, but even if it loses, it will probably win mind share of a lot of developers and consumers. And Mark, how do you see the Apple side of the story? Sort of what are Apple's arguments and what are their chances of winning?
Yeah, I mean, Apple's perspective is essentially twofold. One, there is a contract in place. So no matter how a developer feels, no matter how we feel or Epic feels about the situation, Epic, for all intents and purposes, does have a contractual agreement with Apple for that 15 to 30% cut that Apple takes from all other developers. So that alone, I think, gives Apple a potential leg up in this lawsuit, given the presence of contracts. Secondary, Apple says that their 15 to 30% cut is either lower than the industry average or is on par with the industry. Of course, that's arguable. There's a corner of people who say that the industry is only at that tier because Apple set the tier when they launched the App Store 10 years ago. But, however, for Apple, there are billions of dollars at stake. Apple made an average of $120 million per year between 2018 and 2020 on revenue share from Fortnite alone, right? If Epic wins, or if Epic does make a solid argument in court and does develop developer mindshare, like you said, Olga, the floodgates could potentially open for other developers to have a backlash against Apple, sue Apple, fight Apple in other ways. And Apple made an estimated $20 billion in fiscal 2020 off of commissions from the App Store. So that is a lot of money at stake for the iPhone maker.
Look ahead there at the Apple high-stakes antitrust battle with the maker of Fortnite, which kicks off today. Well, joining us now with more on the latest tech developments is Bloomberg's Asia tech editor, Edwin Chan. Edwin, what are the ramifications then of this trial depending on the outcome? It's not just about revenues, is it?
It's about Apple's place in the massive iPhone ecosystem and its relationship with, I would say, millions of developers the world over. This trial is being referred to as the trial of the year, but in many ways it's going to be a trial of potentially many years that will determine not just Apple's growth prospects, but also the prospects for its partners from Asia to the U.S., and also, again, for the app developers like Epic.
And then in the semiconductor space, one of the most read stories for our global audience in the last few hours around TSMC and Intel Basically, TSMC has said that it can catch up with auto chip demand by June, but then Intel says that the shortage will last a couple of years. What are some of the details there?
They're not actually in disagreement. What TSMC says is that they will manage to begin to meet its customers' minimum requirements by around the middle of the year, but then it is going to take a couple years, I believe was the wording, to fully sate overall demand, because the supply chain is so global, it's so complex, and it's so long and involved that TSMC alone will not be able to single-handedly wrench the auto industry out of its current predicament. And what Pat Gelsinger was saying was very similar to what TSMC has said in the past, which is that, you know, mostly because it takes enormous effort, money, and anywhere from 18 to 24 months to build new capacity and get it up to speed, that we're going to see shortages throughout this year and possibly into 2022.
And then you already have concerns around inflation. So this is the last thing anybody worried about that would need to see. You have uncertainty around supply and rebounding demand. Thank you very much for that. That's our Asia tech editor, Edwin Chan. Well, let's get you some of the Bloomberg Business Flash headlines again with Leanne Garrett. Leanne.
Hi, Youssef. Sources tell us Verizon is nearing a deal to sell its media division to Apollo Global Management. The agreement would jettison the once dominated internet brands of AOL and Yahoo. We are told the deal could come as soon as today and be worth as much as $5 billion. Both sides have declined to comment. Now, Robinhood's largest source of revenue has more than tripled in the first quarter of the year. That is as the trading app became immensely popular with young investors. Amid the meme stock frenzy, revenue from payment for order flow reached about $330 million. That is the practice where market makers like Citadel pay retail brokers for routing orders to them. And Tesla's factory outside of Berlin reportedly will not start production before the end of January next year. That's according to a German trade magazine that says the move is due to delays affecting battery pack output. The report says CEO Elon Musk gave the team in charge of the plant 6 more months to complete that project. And that's your Bloomberg Business Flash. Youssef.
Thank you very much for that. Let's get to the EU's beleaguered vaccine rollout, because that's finally picking up. But even as the bloc nears the milestone of 150 million doses administered, it still lags behind the US and the UK. Currently in a double-dip decision, Europe's delays could add billions to its COVID bill. Joining us now from Brussels is our reporter Maria Tadeo. Maria, I mean, has the EU then turned meaningfully a corner?
I think it's fair to say it has. You know, when you look at the start of the year, this was a very difficult rollout. There was all kinds of difficulties. There was the issue with AstraZeneca, a slow delivery, problems with the take-up, the distribution, and all of that appears to be changing. Now, what we know is that every month the European Union is looking to double distribution, as that is now being reflected in the national figures. When you look at Germany, it's vaccinated for 2 days straight 1 million people. When you look at Spain and Italy, they vaccinated more than 500,000 people in 1 day for the first time on Friday. And then we had over in France, President Emmanuel Macron now promising that everyone in France who wants to get a vaccine from June 15th would be able to do so. So in terms of the take-up numbers and the distribution, we're seeing that is improving. And I have to say, Youssef, you know, just a few weeks ago, there was a lot of concern here in Brussels about this idea of not being able to get to herd immunity by the end of the summer. That would have been a big hit. As you say, the US and the UK are way behind or way forward, I would argue. But now officials will tell you that they feel that this can be done and will be done by the end of August. So it really has turned the page, and the tone is very different now.
So I'm trying to figure out what is going to happen in the summer. I know holding off on my personal bookings. I mean, just moments ago, we heard from the European Commission as well, the headlines crossing the Bloomberg, the statement reading that the EU is proposing to ease restrictions on non-essential travel to the European Union. I mean, what else is going to get factored into that decision?
Well, Yusuf, what we know is that the summer is a crucial season for many economies in Europe. What we also know is that Southern European countries are really pushing so that this year we can have a quote-unquote normal summer. We know last year was a disaster summer with very few bookings. So they're trying to change that. And one of the ways they want to do this is with this travel certificate that they call. So this is a document that you should be or would be in a position to show European authorities that you've been vaccinated or you have a negative test or you've already gone through coronavirus, and that would in theory allow you to enter Europe and do your summer holidays. But again, you know, the issue here is that you may want to open, but infections are still pretty high in Europe, and by reopening or trying to reopen too quickly, you are taking a risk, and that is something that they'll have to factor. Nonetheless, the Greek government says that in 2 weeks' time they want to be able to open, and the French argue that by the end of June, that's just a few weeks away from now, they want to be able to, or be in a position to welcome tourists. So clearly Europe has an intention to open. They need this, they want it, but whether or not it's fully safe, that's a question mark.
Maria, we're going to leave it there. Thank you for that. That's our Brussels reporter, Maria. Today, I want to circle back to some of the market action. We're called quite a bit higher on S&P 500 mini futures, and we're seeing some interesting moves as well in other markets around the world. But bear in mind, a lot of the liquidity is much lower than it usually is. You have, of course, China on holiday. You've got Japan is off, and the United Kingdom as well. But we're currently called as much as 0.5% higher for the S&P 500 mini. In terms of the currency movements, euro-dollar is in focus, currently up about 0.5%. There was a fascinating note out from the folks at Citi. They're seeing 125 to 127.50 by the end of the year. So this is not just on the basis of an accelerating European recovery, but as we discussed with our guest from Commerzbank early on in the program, this is also a story of potential broader dollar weakness. Bitcoin, again, just under $59,000. Here's what's coming up. Prime Minister Modi loses a key state in a sign of voter backlash. We'll get the latest on the Indian elections next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Real risk of the Indian mutant, which we face currently. We have this mutant already in Europe, but to limit the impact and to limit the risk, I think it's necessary for a short period of time to make a total travel ban from India towards Europe until we have a clear assessment about the risks.
That was the European People's Party leader speaking to Bloomberg this morning about the need for a total travel ban from India to the European Union. Weber's comments came as the EU proposes it will ease travel restrictions on non-essential travel. So those lines just crossing the Bloomberg, and that as well eliciting quite a bit of reaction in stocks and in the currency. Let's go for the currency. So Eurodollar just building on the initial strength from early on in the session. The EU is proposing to lift then some of the restrictions on vaccine people. And so that currently is getting factored in. There was a lot of anticipation that there would be movement around this controversial subject. So clearly there's a consensus building within the Commission that this is a subject that needs to be tackled and a decision potentially announced sooner rather than later as businesses can prepare for what a summer in Europe could look like. Well, let's get back to the story in India. The country has seen another day of more than 300,000 cases in 24 hours as the country struggles to cope with a collapsing healthcare system. But international aid has begun arriving despite the ongoing crisis. Elections are underway across many states in India. Prime Minister Narendra Modi's party lost an election in a key state, adding to growing signs of a backlash over his government's handling of the coronavirus outbreak. Let's delve deeper into the story. Get out to Mumbai with Bloomberg's Bhuma Srivastava. What's the latest situation on the ground? Is it getting any better or worse, would you say?
The situation continues to be grim. We have seen one-day surges of more than 300,000 cases for more than 10 days now. It's a bit lower than what we saw on Saturday, which was more than 400,000, the world record. A bit less than yesterday. It's still too early to say that we have turned the corner. Even the deaths were at a record high yesterday, and they're a bit low. But given the fact that large parts of the country are still reeling under the virus and have massive caseloads, it's still too early to say that it's becoming better. So from the looks of it, it is pretty grim and pretty much the same.
What about the vaccine shortage? What kind of momentum is getting channeled into key components of the Indian bureaucracy to try and break through that?
So attempts are on, but on the ground, there are still vaccine shortages. They persist. There are no signs of them getting any better. Although the Indian government has opened the vaccine program for everyone above the age of 18, there are rampant shortages. There are no stockpiles, and the state governments have had to cancel the vaccine inoculation centers as a result of that. That has not changed. From the government level, they are trying to ramp up capacity. Vaccine manufacturers are doing their bit. But there was a recent interview of Serum Institute CEO Adar Poonawalla in Financial Times that said that we can expect vaccine shortages in India to persist till July. That's when he sees Serum Institute, which is supplying AstraZeneca's Covishield to India, to ramp up the capacity to about 100 million doses, up from about 60, 70 right now. So between then and now, it will continue to get scrambled, and India's healthcare system will just have to take the brunt of that.
All right, then we're going to leave it there. Thank you for that. That's Bloomberg's Bhuma Srivastava. I want to get back to the lines and the story unfolding around the European Union. They're proposing to ease restrictions on non-essential travel. They're proposing to lift restrictions for vaccinated persons. We're seeing Eurodollar build on some of the initial strengths of the euro specifically. We're currently at 120.47, and you're seeing a little bit of a move in a broadly positive session in European stocks as well. Remember, we have some important markets that are offline because of the holiday. Utilities and healthcare leading the charge in terms of industries. The coverage continues from Dubai, from London, from the rest of the world. This is Bloomberg.
global attention on the fact that the efficacy levels of Chinese vaccines have not reached the levels that we've seen from the mRNA vaccines in Pfizer and Moderna, and even Russia's vaccine. All of these have efficacy levels above 90%, but the Chinese vaccines are ranging between 60-something% to just below 80%. And specific attention is being paid on one Chinese vaccine, Sinovac. This vaccine has been proven in a large-scale Brazil trial to have an efficacy level of just above 50%. 50% is the minimum threshold that regulators will accept for approval. So that is concerning, especially because this is the Chinese vaccine that's been distributed most widely around the world. A lot of developing countries like Brazil and Indonesia are dependent on this vaccine. So questions are starting to mount on how is this going to affect the global immunization effort. But what's also really important to keep in perspective is that the 50% efficacy rate is looking at all symptomatic disease, even mild sickness. And the truth is that all the vaccines we have out there right now, including the Chinese ones, are nearly 100% effective at preventing hospitalization and death. And those are the two most important things: bring down serious sickness, bring down fatalities. We're still going to see that happen around the world, and that's why it's really important for people to keep getting vaccinated, even if the only access they have is to a Chinese vaccine.
How do you start your morning? Oh, guess who won the fight in a commercial break? This black eye you've got right now looks so authentic.
You let him get in a good punch.
Wake up with Bloomberg Surveillance, weekdays on Bloomberg Television.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We've all learned from the pandemic in terms of that we can actually work from home and work from the office.
We're committed to a hybrid-based working environment for the long term.
It'll really be up to the employee, but in a structured way with the managers.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from New York and Berlin on this Monday, May 3rd. Our top stories today. State of the Economic Union. Warren Buffett calls the U.S. economy red hot, but he says to watch out for inflation. Bitcoin has a rival. Ether cuts into the market share of the dominant cryptocurrency. We'll speak with the CEO of Binance, the world's largest digital currency exchange. And this trial could be epic. Apple squares off in court against the maker of Fortnite. That threatens to reveal the secrets of the App Store. I'm Kaylee Lines with Matt Miller. Francine Lacqua is off today. And Matt, there seems to be a renewed focus on inflation this morning, and then once again on the virus, with the EU Commission proposing lifting restrictions on non-essential travel, and perhaps more importantly for team surveillance. You yourself have secured a vaccine appointment, Matt.
Yes, I've gotten a vaccine appointment for close to the end of May. I'm really looking forward to that so that I can travel back to the U.S., but maybe more importantly, Americans may soon be allowed to travel to the EU, even if it's not for an essential reason like a vacation or a wedding. I have one of those coming up, so I'm really looking forward to the reopening here, Kaylee, but it's very sad to say the situation continues to look horrendous in India. And I talked to the WHO chief scientist this morning who said we could be in for such a bad situation in Africa and some parts of Latin America as well. So while we're getting back to normal here in the West, things look pretty horrible in developing nations.
Yeah, it is a very stark contrast between what you and I are experiencing in the Western world and what is going on elsewhere. We will have more on the story of what's happening in Europe specifically in just a moment. But Matt, first I want to talk about what we have seen in markets. It is a relatively quiet day, volume pretty light, with both China and Japan on holiday today. Of course, the underperformer in the Asian session as a result was the Hang Seng, down about 1.3%. You also were just talking about India, Matt. I would note the Sensex is also also lower, though off earlier lows. Of course, it's not just about the virus, but the political implications the crisis is now having, with Modi losing a key regional election over the weekend. Of course, the rupee is a little bit weaker against the dollar as a result of all of that news going on. And then actually the Japanese yen is the big underperformer in the G10 space right now, sitting at 109.63. As far as the European session, London and the UK also on holiday, which is why Francine is not with us here today. But otherwise, it is green pretty much all across the continent. The stock 600 is higher by 0.3%. And even the autos and parts index is also up by about 0.25%. That is despite the fact that Volkswagen over the weekend warned about production curbs because of the chip shortage. In the bond market, we are seeing bond yields tick higher by about 4 basis points right now, sitting at negative 16 basis points on the 10-year German Bund. That seems kind of like a big deal, Matt. And then the euro is stronger against the dollar by about 0.25%, sitting at 120.48. As far as how the picture is shaping up in the U.S. session, we did see losses on Friday. Futures, though, firmer ahead of the opening bell on this Monday, up about 19 points on S&P minis. Of course, the bond market, I would note, Matt, the Treasury market cash is not trading at this point because London is closed. That will start at 6 a.m. in New York, but futures are down by about 2 basis points. The dollar is a little bit weaker on the day, Matt. And then, of course, talking about inflationary pressures, I would just point to corn futures, up another 2.5%, was near $7 a bushel. The consumer is starting to feel food inflation in a very real way, Matt.
Yeah, absolutely. By the way, I can't wait for, when I come back to the U.S., one of the main events that I want to visit is the Millersport Corn Festival in Ohio. Very, very delicious, and I hope the inflation is transitory, as Jay Powell points out. Let me give you a look ahead to what's going on this week. A high-stakes trial between Epic Games and Apple starts later today. As Kaylee said, the maker of Fortnite, that's Epic, is bringing an antitrust fight over App Store charges for developers. Everyone's watching it very closely. On Wednesday, Uber and General Motors will report first quarter results. Earnings season has been on fire so far. We've seen 90% of companies in the S&P 500 beating the street's expectations. On Thursday, we're expecting the Bank of England to make a rate decision. As Kaylee mentioned, UK markets are closed today for the May Day holiday. And on Friday, we're going to get the U.S. April jobs report. So maybe one more indicator, Kaylee, of how close we are to a change, or at least the consideration of a change in U.S. monetary policy and the bond purchase program there, because that's what markets are watching so closely, right? It's inflation, but the reason that they're watching inflation is to see if the Fed is even thinking about changing course any time in the future.
Thinking about it. But to your point on inflation, Matt, the Fed seems pretty insistent on looking through any kind of inflation that we're seeing at this point in time. So maybe it makes the focus on the labor market even more acute. Another reason why that jobs report will be very important on Friday. But let's get back to that breaking news. The EU Commission proposing easing restrictions on non-essential travel to the EU. Joining us now for more is Bloomberg's Maria Tadeo. Maria, take us through the latest.
Yeah, good morning, Kaylee. So we were expecting this idea that Europe would reopen for the summer. This was something that many Southern European countries had been pushing for, to have a normal summer season, something that looks like normality back. This is a huge industry and, of course, a huge business, too. Now, what the Commission says is that going forward, countries that have coronavirus in check and have a good situation when it comes to infections and have been vaccinated could come into the European Union for things that are non-essential. So that means that if you're in the U.S. and you've been vaccinated, you could technically come here for a holiday. The same would go for the U.K. What the Commission does say is that initially they want to go for EU-approved vaccines. So that would be Moderna, Johnson & Johnson, Pfizer, BioNTech, and AstraZeneca, and then potentially take that wider. That could include the Chinese and the Russian vaccine, but it's not in the original list. And of course, you have to factor too here that this is a proposal from the Commission, that it's a decision that European leaders will have to agree to and ultimately implement. They also want to put an emergency brake to this plan. If a situation gets out of control, a country in the EU could unilaterally say, I'm going to halt travel from this particular country because I'm concerned about variants and mutations.
So the vaccine situation, Maria, here looks great. And you spoke to Manfred Weber this morning from the European Parliament. How close are we to getting the EU Recovery Fund dispersed out to the countries that need it most?
Yes, you know, Matt, and that's the second part to the story. On the one hand, you're looking at the vaccines, but then the second is that big recovery fund. Now, we know that 13 countries, including Italy, Germany, France, and Spain, have submitted their plans. The idea here is that by the end of the summer, the Commission would put out an assessment to whether or not those reforms work, whether or not the plan works, and see the money at the end of the summer beginning to pay off. I have to say, a lot of the officials that I've spoken with are actually optimistic that by July, the Commission could begin to tap markets. That is AAA debt, that is sure debt, never been done in the European Union. So it is a breakthrough of big magnitude, and then begin to pay off by the end of August. Of course, the thing here is not just the payments, but whether or not that money is used properly, and that's much more of a long-term story.
All right, Bloomberg's Maria Tadeo with all of the latest out of Europe. Thank you so much. Let's turn now to billionaire Warren Buffett. He has delivered a clear verdict on the state of the U.S. economy. He thinks it's red hot. Danny Berger joins us now, and Danny, Buffett also weighed in on that inflation debate.
Yeah, he certainly did. Look, Kaylee, him saying that the economy is red hot, being bullish America, that's not new. We hear this refrain from Buffett, don't bet against America. We even heard it in the depths of the pandemic. But yes, his comments on inflation are really what's going to capture the imagination of the market. Because when Buffett speaks about the economy, he's speaking from experience. He has so many different companies that touch different aspects of the economy. So he said, look, prices are going higher, and he would know he has companies that he says are raising prices, as are others, and people have more money in their pocket and they're going to pay those higher prices. Now, that is a kind of comment that doesn't necessarily suggest that inflation will be transitory. It really does contrast with what we've heard from the Fed, what we heard from Yellen even saying that Biden's plan wouldn't increase inflation. Now, in terms of market warnings, it's not just that the market has to contend with today from Buffett. It's also just this overall concern, he says, that people are entering the casino, more people are rather, than leaving it every day. So talking about sort of the Robin Hood type trading. Munger had some very harsh words about Bitcoin as well, and he's not the only one. We've heard Kaplan talk about excesses in the financial market, and Greg Jensen from Bridgewater also warning, saying that the easiest place right now to die is being short, Kaylee.
Yeah, and of course, Fed Chairman Jerome Powell also talked about froth last week. Bloomberg's Danny Berger, thank you so much. I do want to take a quick check now on some stocks moving in pre-market trading in the U.S. A number of vaccine makers are moving to the upside. You have CureVac higher by around 3.5% in early hours. We are expecting data from its trial for its COVID-19 vaccine sometime in early May, so it could be in the coming days. Novavax is also higher by more than 2%, as is Moderna. And separately in the biopharma space, I wanted to highlight Brooklyn Immunotherapeutics. Last week, it bought a license for mRNA technology, which of course is what is used in Moderna and Pfizer's vaccines. It is surging 65% in early hours. Now, that's after reporting a share sale agreement with Lincoln Park Capital could sell up to $20 million in common shares, so that stock is flying before the bell, Matt.
All right, great look at those morning movers. We have markets off to a little bit of a slow start over here, Kaylee, so we're waiting with bated breath for the U.S. markets to open, especially for that Treasuries trade. When we come back, we're going to talk to Mark Anderson, UBS's co-head of global asset allocation, and see if he thinks it's time for a regime change right now. How will that affect your portfolio? Later on, Changpeng Zhao, known as CZ, the CEO of cryptocurrency exchange Binance, joins us. This is Bloomberg.
why did you decide to become Secretary of Commerce? Because in Rhode Island, you're the 800-pound gorilla because you're the governor.
Because I wanted to be on the team that helps America build back.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Kaylee Lyons in New York. Francine Lacqua is off today for the UK's May Day holiday. Now, wherever you look, sentiment is high, and what I've got here is Bloomberg's Economic Surprise Monitor. ECSU Go is a way of seeing this. If you break out this chart, you'll see that economic surprises continue to beat the street's expectations. It's the same wherever you look. The University of Michigan Consumer Confidence Index is also very high, but not quite as high as we saw pre-pandemic. So the question is there more room to run here in terms of economic surprises, in terms of higher sentiment, or have we reached a peak that's ready to turn over? Joining us to talk about that right now is Mark Anderson, head of asset allocation at UBS Global Wealth Management's Chief Investment Office. Mark, thanks for your time this morning. What do you think? You know, as Warren Buffett said, the U.S. economy is red hot, and everybody thinks that. Is there any more room for sentiment to grow?
Hi, Matt. Great to be with you here. So I do think that there is room for sentiment to move further ahead. So first of all, on the consumer side, we're likely to see in the U.S. that we'll be adding close to 1 million jobs over the next 3 to 4, 5 months or so, really, as we have the unemployment rate still at 6% above pre-pandemic levels. I think that's going to spur more spending. Buffett is absolutely right that the U.S. economy is red hot at the moment, growing at 6.4% in the first quarter. But we like to see in the second quarter that number accelerated closer to 10% and only decelerate a little bit from that astronomical figure into the third quarter, which is the time where the European economy is really going to be accelerating from the reopening on this side of the pond. So I do think that the economy is hot, but there is chance that it goes even hotter as we go into the summer months here.
Interesting. And we're going to get these employment numbers on Friday. Obviously, inflation is one aspect of what the Fed's watching. Employment is another. That seems to be a place where there's a lot more room for improvement. On the other hand, inflation expectations are already pretty high.
They are, and I think what we're going to see is that, and the Fed laid this out very nicely last week, so they of course understand that part of the inflation peak we're going to see into the month of May is going to be some transitory effects, which is linked to the low inflation rates we saw in the beginning of the pandemic roughly a year ago. So that means we're going to see CPI numbers from the US that gets very close to 4%. But I think the interesting thing, and Jerome Powell said that in his press conference last week as well, is that there's going to be another side of the coin, which is that we're going to have some of these bottlenecks that are going to continue to push prices a bit higher. Now, on top of that, we're forecasting from UBS that commodity prices rise another 10 to 12% over the next 12 months, led by things like oil prices, more the cyclical commodities, even agriculture. And I think there's going to be that question around whether that's really going to be transitory, all of those effects, or whether we're going to see a bit of a sustained move up in inflation. And the markets are currently telling us, when we look at break-even inflation rates in the US, on the 10 years, an example, up to 2.4%, it's just moving upwards like a steamroller.
Right.
And I think the market, yeah, go ahead, yeah.
Well, so Mark, obviously the Fed, though, still is sticking by the messaging that this is going to be transitory. What happens if the Fed is wrong?
I think the interesting thing is that the Fed will be leaning towards their own experience over the last decades in this lower for longer decade, as many people have coined it, which was one of lower growth, lower productivity, lower inflation. But I think with a couple of years of very strong growth and inflation now ahead of us, there's going to be a bit of a change in market narrative, potentially led by people like Buffett and Larry Summers, where there will be question marks. Is this going to lead us into kind of a roaring 20 environment where both growth and inflation will be strong, or more like a stagflation light, where ultimately the Fed will need to hike rates more aggressively than it's currently priced in? And I think that's going to be the interesting debate in the coming quarters.
Absolutely. Mark, let's shift from economic growth to to corporate earnings growth. We have seen incredible upside surprises both in the U.S. and in Europe, and yet there has been no reward for beating expectations. If earnings aren't going to be an upside catalyst, what is going to be?
So I think that the earnings have not really been driving the markets higher maybe over the last week or so, while we've seen some very impressive numbers. In the US, we expect to see above 30% earnings growth for the year of 2021 as a whole. However, we have seen that earnings have been steadily upwardly revised in many regions, and I think that's an underpinning we're likely to continue to see as we move forward. And I think it's more in the combination not only of earnings, but also the fact that we're going to see these couple of absolutely booming quarters on the economic front, combined with a central bank that will still be talking about wanting to see the actual numbers getting hotter, that leads the equity markets going higher. So I think it's a number of different factors supporting us from here.
Yeah, to Kaylee's point, earnings beats have been off the hook. If you look at a chart on the terminal number 8161 in our BTV library, you can see that 90% of S&P 500 companies have beaten earnings expectations. That's got to be, well, it must be physically near a peak. It just can't get much higher than that. Mark, in terms of asset allocations, which is your role at UBS, where are you positioned right now? How are you strategically positioned?
So on a very strategic basis, I think the first note is that we do think that this inflation debate is going to come up. Part of our core fixed income portfolio is inflation-linked bonds, TIPS more specifically. That's something that's benefiting from rising inflation. A lot of our more strategic but also tactical positions in our asset allocation is linked to things that are both benefiting from a stronger economy, but also rising rates, rising commodity prices. We're long things such as energy and financials in our portfolios. We even think that emerging markets has more upside as it looks relatively attractively valued, and we see Asia starting to surprise on the upside as well, and particularly on the earnings front. So many things that we're doing to try to capture this booming growth and inflation sentiment at the moment.
Got it. Mark, thanks so much for your time this morning. Mark Anderson there, Head of Asset Allocation at UBS Global Wealth Management's Chief Investment Office, talking to us about his positioning. Coming up later, Dana Peterson, Conference Board Chief Economist, speaking of sentiment, is going to join us. That's at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Matt Miller in Berlin. Francine Lacqua is off today. Now, Matt, let's get the first word news. And in India, another sign of backlash to how Prime Minister Narendra Modi is handling the world's worst coronavirus outbreak. Modi's party lost an election in West Bengal, a key state he has visited frequently. Meanwhile, the number of deaths in India blamed on the virus set a daily record yesterday, almost 3,700. Elon Musk's SpaceX has cemented its status as NASA's only commercial partner that's capable of carrying people. The company's Dragon capsule returned 4 astronauts to Earth early yesterday, splashing down in the Gulf of Mexico. That concluded SpaceX's first regular crew mission to the International Space Station. Pressure is mounting on British Prime Minister Boris Johnson over who paid for the refurbishments to his apartment. Johnson's Conservative Party has seen its lead shrink ahead of local elections. And the head of the Scottish Conservative says Johnson should quit if he is found to have broken the rules. Johnson denies any wrongdoing. And anger aimed at the American owners of the famed Manchester United soccer team has boiled over. Hundreds of fans demonstrated outside the team stadium yesterday. Dozens broke in, setting off flares and smoke grenades to show their opposition to the Glazer family. They're angry over the family's attempt to form a breakaway league. The protest led to the postponement of United's match against Liverpool. Matt, either I grossly underestimated the amount of emotion involved for European soccer fans, but this is pretty remarkable, this reaction to this.
Yeah, I mean, look, soccer hooligans will do things like this. It's pretty amazing, but I'm just too obtuse to understand the draw of the beautiful game. These people are much more sophisticated, I think, than I am. So I don't know what to say. It was an amazing show of passion.
It absolutely was. All right, coming up, Bitcoin's domination of the crypto market may be coming to an end. We're going to speak with the CEO of Binance next. This is Bloomberg.
One of the interesting features about this illness is that if you look at it, the people who develop these long haul symptoms are often not the individuals who are hospitalized and were sick and on a ventilator and stuff like that. These are individuals who actually, most often, they never went to the hospital. They had a relatively mild illness in the acute phase, and they recovered from it. If you were in the hospital, it means you probably mounted a very strong immune response, okay? And you recovered from the illness, you probably got rid of the virus. If you never mount a strong enough immune response, then what happens is you may have mild symptoms. You thought, oh, I escaped this. But in reality, you never got rid of the virus. So you get this chronic immune activation that persists in these individuals. But it's never good enough to get rid of it because they never got rid of it in the first place. But it's enough to start causing collateral damage. And what the virus does is it inhibits certain types of immune responses. It's a drain on society at every single level. I mean, it affects women more than men. It affects people in their average age is 40. That's the most productive years of your life. And so you can see that the impact, worldwide impact of this is unbelievable. Economic toll, the psychological toll, every aspect of society is going to touch.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Matt Miller in Berlin. Francine Lacqua is off today, of course, for the May Day holiday in the UK, Matt. That means volume is a little light today. It's a little bit sleepy out there, but I wonder if people are actually going to sell in May and go away, Matt.
Yeah, that's, the old adage. And I was interested to find out, it actually held true for commodities. On the MLive blog, they pointed out that over the last 10 years, pre-pandemic, May has been the worst month of all 12 each year. It's unlikely to be a bad month for commodities this May, as the inflation theme continues to work its way through markets. But the question is, how is it going to affect equities, right?
Absolutely. Inflation, inflation, inflation. That is what it is all about. And that commodity price inflation is a very real factor in this market right now. Let's get a check on the equity markets more broadly, though. As I said, London is closed. You also had some markets in Asia closed for holidays as well. That does mean volume is a little bit light. But where we stand right now is now unchanged on the Stock 600. So we are well off the earlier highs. Here in the U.S., though, futures well off highs are still pointing to a firmer open. We're up about 12 points on S&P E-mini futures with about 4 hours to go until the U.S. opened. I would note that the Treasury market is not trading in the cash market right now. That'll start at 6 a.m. Eastern time. But in foreign exchange, the euro is stronger against the dollar by about 0.25% right now, sitting at 120.51. And then, of course, we are watching crypto always, Matt, but now it is Ethereum that has my attention. Forget about Bitcoin. Ethereum up 14.7% from Friday's level. Now, as for some movers in pre-market trading, no surprise with the gains we are seeing in the crypto space. A number of crypto-tied stocks are heading higher. Marathon Digital up 5.5%, Riot Blockchain and Bit Digital are up around 4% each, respectively. And then, of course, Coinbase, a crypto exchange that went public a few weeks ago, higher by 1.7% in early hours, Matt.
All right, by the way, Ethereum has been soaring all year. We spend so much time talking about Bitcoin, Kaylee, but if you look at this chart, you can see that Ethereum has tripled over the year, while Bitcoin has only doubled from the start of 2021. In the middle here, you can see the Bloomberg Galaxy Crypto Index, which kind of cuts the two in half. But this just shows the outperformance of Ethereum and really the outperformance of altcoins. For more, we're joined by Bloomberg crypto reporter Joanna Ossinger. Joanna, Bitcoin is where most of the focus is for the mainstream, but it looks like altcoins have taken a ton of market share away from the big, what used to be the big lion on the plains, and now Bitcoin is less than half.
Right. Yeah. Bitcoin is about 46% of total crypto market cap at this point. And there's been so much attention on Bitcoin. It's been it's the original, it's been around so long, and people have been getting into it. It reached a record in mid-April, and above 64,000. It's now down below 60,000. But these other coins, I mean, Ethereum has just taken off. Even just today, it went above 3,000 and it didn't stop. It hit 3,200. This is something that, as of a month ago, just hit 2,000 for the first time. So you have Ethereum, you have Binance Coin, you have Dogecoin that everybody loves to talk about. The cryptocurrency started as a joke, but these coins have just really taken off this year. And part of this is that as people look at crypto, they start to really think about investing in it. They start to say, well, what do I want to do here? They're not just looking at Bitcoin, they're looking at everything else. They're looking to even diversify within crypto. And so there are a lot of narratives, a lot of things that they can choose from. And that's really helping these other coins start to do well. And it isn't just Bitcoin anymore.
Yeah, absolutely. I mean, I think the takeaway is hopefully that they're learning, but it could also be that they're just jumping on momentum trades. Bloomberg's Joanna Ossinger there with a look at the altcoin rise. Joining us now to talk more about this is CZ, Binance founder and CEO. CZ, this is, I think, something interesting that you've actually been talking about lately. To me, it looks like people are learning about the use cases of altcoins, and that's why they're getting into different investments like Ether. Of course, it could also be that people just see the prices going up, and there's a lower cost of entry for these altcoins, and they're jumping on them for that reason. What's your take?
I mean, it's always a variety of reasons. There's probably close to 300 million people in the crypto market now, so everyone do it for different reasons. Some people are trading for speculative returns. They look at what's rising and they just try to jump on it. But I think what you mentioned about the use case is actually a very accurate. I think for the people that I interact with more, I think they find that most people learn about Bitcoin as the first cryptocurrency. If you learn about cryptocurrencies, blockchain, you have to go through Bitcoin. You learn about Bitcoin first. But after that, they do venture out and say, hey, well, now there's a blockchain. Blockchain is not just Bitcoin. There's a lot more you can do by in addition to just transferring value. You can do smart contracts. You can do many other things. You can do NFTs. So all of these use cases are booming right now, and people need the other coins to do this type of new transactions. Ethereum is one of those clear examples. That's probably why Ethereum is going up.
CZ, my concern is, and you've been tweeting about this, a lot of people rip on Bitcoin and they don't even know what a public key is. Or you have people investing in your BNB, but they don't know the use case. They're just jumping in because the price is rising. And if you have too many people like that, that's irrational exuberance. That's froth in the system. And it doesn't provide a solid base for prices. That's why we get even more volatility. How do you look at volatility and people that are serious investors in crypto?
So I think it's the same proportion of people who are in traditional stock markets or any markets that's actively traded. There's always guys who do fundamental research and understand the underlying assets in a lot of detail. Some people understand BNB more than I do. And then there are people who just follow other people, who just following the herd. There's always a large number of people having the herd mentality than the guys who actually do serious research. That's just how advanced our civilization is right now, which is everywhere. So it's not unique to crypto. It is in crypto like that. The herd followers are less committed. Whenever there's some negative news, they run away. Whenever there's positive news, they try to rush in. So they do cause more volatility versus the sort of the diehard fans who understand and really love the projects. But it's the same thing in stock markets. There's nothing new in crypto. So volatility is everywhere. And actually Bitcoin, Bitcoin is probably less volatile than similar sized assets like Apple stock or even Tesla stock.
Of course, Binance in some ways benefits from all the volatility, given you are the biggest crypto exchange in the world by volume. What is the composition of your customer looking like? How is it separated between kind of retail investors who are just chasing the rally and actual institutional investors? And as you get more institutional buy-in, does that mean volatility is going to go down?
Yes, so I think our makeup so far right now is still major retail, but the institutions have been rising much more quicker than retail over the last year or so. So I think right now it's roughly about 70-30, and it also depends on how you define retail versus institutions. Most of the retail people do just do simple buy and sells, whereas the institutions are more sophisticated. There are also large institutions that do volatility trading. They seek volatility, and they sometimes even want to generate volatility. So it's not to say that just because there's more institutions trading, then there's less volatility. The guys like MicroStrategy, they buy and hold in large amounts. Those guys reduce volatility and they push the price up permanently. So we do see a mix of users, but our user base is still more retail today.
You're also launching Binance NFT next month. It'll be a marketplace for non-fungible tokens specifically. Do you expect institutional investors to be interested in that? How big is that market opportunity?
To be honest, initially, the short answer is I don't know. Initially, logic says that the institution NFTs trades in a very different style. They trade more like an auction type of style because there's only one item to be traded, and they're not fungible. So it's not like Bitcoin. You can buy like parts of it, and every Bitcoin you buy is the same. It's interchangeable. So non-fungible tokens right now is still the early days of NFTs. So most likely, most of the trading mechanisms are more like auctions. One big item goes for millions of dollars, hopefully, and there's smaller items as well for people to buy. But I don't think today the institutional traders who are doing high frequency trading in fungible tokens can migrate to that very easily. Those are more like art collectors, etc. For the initial iteration, and so people have to understand art, and people have to know what the meanings behind it, and they have to have a pretty good sense of whether it's going to go up or down later on. So it's probably a different type of users.
I wonder about Binance. I talked to Anthony Trenchev about this with Nexo as well. They don't have any plans to go public right now, and you've said you don't have any plans to go public. Why not access the public markets, especially right now when your popularity, the momentum is there?
Sure. So I think we have a very good example of a private company that's done really, really well, and it's Bloomberg, right? So used to be my ex-employer as well. So Bloomberg never went public. I think going public is a good option for many companies. It's a good way to raise money. It's a good way for early investors and sometimes even founders to exit partially or completely, or at least have the option to do so later on, and also have a publicly discoverable pricing on the trading market. But for many organizations, they are sufficiently well funded. They have sufficiently solid businesses that are profit generating, same as Bloomberg. So they don't really need to go. They don't have no need to raise the money. And then investors may be long-term driven. They are not really looking for a public exit anytime soon. There are still other ways to exit a business if you really want to. So I think basically it's not like, and only a very tiny percentage of businesses, even the profitable long-term businesses, actually go public. So public is an option for many, but it's not a mandatory thing for every business.
This kind of ties to the private versus public, but different ways of thinking about digital currencies. You, of course, have Bitcoin and Ether, cryptocurrencies in that space, and then you also have things like the digital yuan controlled by central banks, the PBOC in China. Do you see those coexisting? Or is one day currencies controlled by governments and central banks going to displace the likes of Bitcoin?
I think, obviously, I believe they're going to coexist for a while. I think they will coexist as long as people are willing to hold, either or both. I think most of the first generation central bank digital currencies or central bank blockchain currencies, they will use blockchain technology, but they will most likely miss a few key properties of sort of what we call pure cryptocurrencies, such as permissionless, so no one's in control of the digital currency, limited supply, so there's no more additional minting after the first, or at least we set our upper bound, and it's never going to go over that mathematically. likely, and also more freedom of transactions. Most central bank digital currencies are going to have quite a lot of surveillance and control attached to it. That would be my expectation, and that's logical to expect, I think. So I think property-wise, even though they're all going to use, they most likely will use the blockchain technology. They will have encryption. They will have private keys, public keys. They have blocks that forms a chain. That's all fine. But at the end of the day, there's those core properties that users care about that matter. So I think they will coexist for a while to come.
CZ, I wish we had more time with you. Great to get your thoughts on this. Hope we can get you back. CZ there is the founder and CEO of Binance, the world's largest crypto exchange by volume. Now, coming up, the fight over the future of the App Store. More on Apple's high-stakes antitrust fight with Epic Games next. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Apple and Epic Games are entering a trial that could impact the heart of Apple's App Store, the 15 to 30% fee that the iPhone maker takes from developers who charge for paid App Store downloads as well as in-app purchases and subscriptions. This matter kicked into high gear when Epic replaced its payment system inside of its popular game Fortnite with its own payment system. That circumvented Apple's in-app purchase system, which takes the fee. That, of course, led Apple to remove Fortnite from the App Store. Hours later, Epic sued Apple, and here we are today. Olga, you cover Epic Games. What's their argument in this trial, and how do you think they'll fare?
So Epic argues that Apple has monopoly power in the iOS app distribution market. It argues that Apple locks developers into selling their iOS apps only through the App Store, and it forces developers to use its own payment functionality, and Epic would like to change all of that. Epic founder Tim Sweeney is going to testify and say this is unfair. And Epic is going to have a slew of witnesses, such as economists, who are going to say that Apple is just greedy and is, trying to take developers' money away from them. And a lot of legal experts say that Epic has a fair shot at winning, but even if it loses, it will probably win
mind share of a lot of developers and consumers. And Mark, how do you see the Apple side of the story? Sort of what are Apple's arguments and what are their chances of winning?
Yeah, I mean, Apple's perspective is essentially twofold. One, there is a contract in place. So no matter how a developer feels, no matter how we feel or Epic feels about the situation, Epic, for all intents and purposes, does have a contractual agreement with Apple for that 15 to 30% cut that Apple takes from all other developers. So that alone, I think, gives Apple a potential leg up in this lawsuit, given the presence of contracts. Secondary, Apple says that their 15 to 30% cut is either lower than the industry average or is on par with the industry. Of course, that's arguable. There's a corner of people who say that the industry is only at that tier because Apple set the tier when they launched the App Store 10 years ago. But however, for Apple, there are billions of dollars at stake. Apple made an average of $120 million per year between 2018 and 2020 on revenue share from Fortnite alone. Right? If Epic wins, or if Epic does make a solid argument in court and does develop developer mindshare, like you said, Olga, the floodgates could potentially open for other developers to have a backlash against Apple, sue Apple, fight Apple in other ways. And Apple made an estimated $20 billion in fiscal 2020 off of commissions from the App Store. So that is a lot of money at stake for the iPhone maker.
That's a look at the high-stakes antitrust fight over how much Apple's App Store charges developers. And Matt, indeed high stakes, billions and billions of dollars at stake here for Apple. And of course, the App Store is a huge driver of its services business.
Yeah, first of all, though, shout out to Mark Gurman. That was an excellent piece of reporting, and he is always so on the money when it comes to covering Apple. But yeah, you know, this is huge for Apple. The only issue is analysts aren't too concerned because Apple doesn't typically lose things, right? So even if they were to lose a little bit, they're not going to lose a lot on this or any of the other cases that they face right now. They're just an absolute juggernaut.
Well, that's absolutely fair, Matt. But also, even if Epic loses this fight in the U.S., it's pursuing similar action in the U.K. and in Australia. So this may dog Apple for a while to come. And of course, coming up later on Bloomberg Technology, we'll have Galaxy Investment Partners CEO Mike Novogratz on the program. That is at 5 p.m. in New York, 10 p.m. in London. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Matt Miller in Berlin. Francine Lacqua is off today. And joining us now, Tom Keene, co-anchor of Bloomberg Surveillance. Tom, you're focused on the Fed and the U.S. economy. Of course, we could probably call you the Oracle of Bloomberg Surveillance, but the Oracle of Omaha has spoken on that, and he says the economy is red hot.
Yeah, well, Warren Buffett does it annually, and sometimes he's right and often he's wrong. As Matt mentioned earlier, he sold Apple, which I still don't really understand. How about a chart of the year in May, early May? Let's bring it up. This is nominal GDP. I stole this from a guest. It's always good to steal charts from your guest. Bruce Kasman coming up is that kind of person. This is the glide path of nominal GDP and what would have happened off of 2007. Then below it, the glide path of nominal GDP before the pandemic. We've already made it back to the pandemic level and exceeded it. And we're getting back towards that glide path. But it really shows you, Matt Miller, the distance we need to get back to the good feeling before 2007. That's that angst you see from sea to shining sea.
Yeah, absolutely. I mean, we need to get back to the good feeling of 2019. I was looking at the University of Michigan Consumer Confidence Index today, and it's not even back there yet, even though it's up and people think sentiment is so strong. Tom Keene, co-anchor of Bloomberg Surveillance, founder, creator of Bloomberg Surveillance. Looking forward to your program coming up with John Farrow and Lisa Abramowitz. Kaylee, let's take a look at the other things that we're watching today. I'm really focused on the European Union's expected recovery. Catherine Bosley in Zurich has a great article today on the Bloomberg terminal about the recovery coming, expected to be coming with the vaccination jump. I got my appointment on May 18th finally, and with the EU Recovery Fund starting to get paid out to the periphery. The countries that need it most, Italy and Spain, for example, are going to get the most, although only 13% of the total 750 billion euros will go out in this current disbursement.
And of course, the other thing we have to watch in Europe, Matt, is the EU Commission pushing the countries to allow non-essential travel in Europe, especially from vaccinated countries. And I myself just got my second shot, Matt, and I'm feeling quite good about my prospects for my Ireland trip coming up in July. Of course, the other thing I have my eye on today is ISM manufacturing data. That's coming up at 10 a.m. Eastern time. We're looking for a print of 65 for the April reading. And remember, Matt, the March read of 64.7 was the strongest since 1983. So this print is expected to top even that. But of course, it's the prices paid metric that I think will be in particular focus. Really important read on inflation, how supply chain pressures are impacting manufacturers. So I will definitely be watching that data at 10 a.m. Eastern, Matt.
Yeah, for sure. Market PMI is going to come out, I think, just 15 minutes before that. And then we're going to get construction spending as well as ISM. So a lot of data coming out. Kaylee. Coming up in the next hour, Bruce Kasman, JP Morgan chief economist and head of global economic research, joins John, Tom, and Lisa. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This economy is very resilient, and now it's working with the private sector and the public sector.
The only real surprise for me this earnings season so far is the magnitude of the beats.
Whether you're growing at 9% or whether you're growing at 6%, let's face it, the labor market, I think, is going to remain very strong for at least the next few quarters.
We're in the third inning of a continuous economic cycle that will continue to bear fruit. So I don't think this is sort of peak growth.
The question is, how long is transitory? Is it a couple of months? Is it a year or 18 months? But it's certainly not long term.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get it started from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures positive 1/3%. Tom Keene, payrolls Friday. The countdown begins right now.
Payrolls Friday is going to be ginormous, John. I'll let you give me the trend here, but I'm going to say 900,000 is the talking number with those odd numbers above a million. It is about a boom economy, and I know, John, it's a boom economy we observed this weekend.
Approaching 1 million is the estimate now ahead of Friday, Tom. And Morgan Stanley looking for the unemployment rate to come down to 5.6%. Just a reminder, a year ago in the June Fed meeting, the Federal Reserve was forecasting, projecting, estimating the unemployment rate would come down to 5.5% at the end of 22. We're talking about it this Friday.
This is a week of reframing the technology earnings and all that's ancient history here, John. I would suggest Mr. Kaplan of Dallas got out front of this week's debate on Friday with his comments to Montgomery, where he talked about the earliest opportunity. And it's just fascinating to me, John, to get a timeline from the Dallas Fed president, granted a non-voting member.
And Lisa, Mr. Al-Arian, Dr. Al-Arian in the FT this morning, it's not just time for the Fed to start thinking about less monetary stimulus, it's time for it to taper.
Yeah, this concern here about financial excess, and that's certainly what the Fed's Kaplan was talking about. I do think that probably Jay Powell shrugged him off and said, really? Come on, just get with the program and stick with the narrative, because this is what we're going with. The key question is, when will that become a liability to the economic recovery, John? Because at a certain point, if the excesses create some sort of correction or some sort of issue in the markets, that could derail what the Fed's trying to do.
That is Mohammed's argument this morning. A little bit more on that a little bit later. Let's start with the price action of Monday morning. Good morning to you all. After a big monthly gain through April on the S&P 500, the biggest monthly gain on the S&P going back to November last year. Equity futures climbing just a little bit, up 13. We advance 1/3%. Yields on a 10-year, 162.59, and euro dollar. We've got to talk about travel. A push to reopen travel in Europe.
Did you book Capri this morning?
I think Italy was already booked several months ago, Tom. I was just waiting for the government to do its part.
You know, John, I got to say, out on social, I'm seeing some of the hotels I know in Europe opening up again, and I give them just a massive shout out after what they've been doing. In my case, in Venice, the Hotel Metropole, a major shout out. John, it's exciting to see them making every effort to reopen.
I have no doubt you'll do your bit to support those names,
We are doing
Tom.
that.
I have no doubt about that
planning
at all. Tom Keene doing his bit. I'm doing my bit. Lisa, we've all got to do our part.
I'll do my part next week. I'll be off. And let me tell you, I'm looking at all the flights and seeing what else I can book out there. Everybody needs a break, and certainly we're seeing a break today at Sleepy Market, and we've got the UK closed, and we've got markets in China closed as well. In the U.S., the focus is going to be on the data, the manufacturing data, starting at 9:45 a.m. You get the ISM manufacturing then at 10. Expect an acceleration, but expect more discussions about the chip shortages as well as slowdowns in some of the deliveries. Again, though, I'm looking at inventories. How much are they absolutely plummeting as companies try to keep up with the incredible demand among the consumers who are flush with cash? President Biden today going to be taking a tour in Virginia, talking about reopening schools as well as his plan for American families. I'm very curious to hear the plan to reopen schools, given the fact that a lot of kids are not eligible for vaccines. Yes, this is personally motivated, but I am very curious about this, and I'm sure other working parents are as well. And then 2:20 p.m., Fed Chair Jay Powell will be speaking on community development. People are not looking about his comments on community development. They are looking at his comments on when he views this labor market as being fully recovered. What does substantial further progress mean? It is the new transitory, John. How do we know we've reached the end? It's not just the unemployment number anymore.
I can tell you we're stuck with this debate all year. It is going nowhere, and it kicks off again this morning. Secretary Yellen over the weekend speaking to NBC, basically saying, I don't believe that inflation will be an issue. Then we had Warren Buffett over the weekend as well, Tom. His words, it's almost a buying frenzy. People have money in their pocket, and they're paying higher prices.
I did a calculation on Lyft, and they're up 27% in price last week. To be honest, they brought it back down a little bit this week as they micro-price, John. You know what? I'm just going to turn to pros like Bruce Kasman.
Let's bring in Bruce Kasman right now, JP Morgan chief economist and head of global economic research. Bruce, let's start there. How difficult it is to forecast in this environment for you right now?
Well, I think it's difficult to tie down exactly how strong the economy is doing, but I think it's pretty simple to recognize that we're in the midst of a boom here in the U.S. And, you know, what I also want to emphasize is partly off the conversation you just had, is Europe's about to join us. So there's going to be fairly broad-based strength in the global economy for the next 6 months or so.
Bruce Kasman, good morning. Tom Keene in New York. I want to go to Kasman Economics, which is your 26-page must-read Friday evening. The world stops. Everybody sneaking looks at it as they pretend they're doing social work. And Bruce, the first chart is always the most important. You have a spectacular U.S. chart of the partition of inflation of goods and services. When does service inflation catch up?
Well, it's not going to fully catch up, partly because, as you've been noting, there's supply shortages and goods prices are going to continue to rise rapidly. But I think March was the first month where we started to see service price inflation pick up, and I think it's going to be the big event in the next few months that overall inflation is going to be lifted both by service prices normalizing and goods pricing staying strong.
John, I think this is the absolute key metric with that jobs report that we're going to see Friday is the path of service inflation. There's a real mystery to it.
And wages, the compositional story, Bruce, picking up again. We've got to talk about wages and whether wages will be useful for the next several months. How much longer will we have to look at a labour market that is distorted by the events of the last 12 months?
Well, I think when you look at the big gains in jobs, you're also seeing, I think, the rotation back towards the depressed service sector. And I think in terms of wage inflation, that's actually going to be a depressing effect. I do want to emphasize, especially if we're talking about inflation, there's two very different stories here. One is how much pressure are we getting as we get this booming growth and we normalize. And we think we're going to get a fair amount of inflation pressure in the near term off of that. But I think if you look at what's happening in the wage measures that are not distorted, if you look at where levels of service price inflation are, we're still pretty low. So I think as the Fed has been doing, you want to look through some of the near-term dynamic, which I think is going to be powerful, and recognize we still got a way to go before we normalize inflation.
And I hear that, although near-term dynamic is difficult to say when you talk about the Intel CEO coming out over the weekend and saying that the chip shortages are going to continue for years. He doesn't see it easing very much at all. How do we decide this is transitory? At what point in the year can we say, okay, now we have a true assessment of the post-pandemic economy?
Well, I don't think it's going to be easy. And quite frankly, I think what we're going to see in the next few months is not going to be very indicative of the trend. However, I do think if we're right, that we can carry strong growth into next year, given where the labor market is, given what the Fed is trying to do. I'm a big buyer of the fact that we're going to have a trajectory of higher inflation. I just think this year's move is not going to be particularly indicative of the magnitude of that acceleration. But it's happening. I think this is not what we've been living through for the last 20 years on the underlying dynamics. Just don't buy how strongly the near term is going to be sending a signal.
We've stopped talking about a K-shaped recovery a bit, Bruce, and I'm wondering how much the K-shaped recovery not only has persisted, but will hamper some of the full employment metrics that we see later in the year.
Well, we do have an economy in which there still are some sectors that are really badly hurt that haven't recovered. And even with what we're looking at over the next 3 to 6 months, we're still not expecting jobs to get back to where they were before the pandemic, at least till sometime early next year. So there's still a lot of damage. There's scarring. I think the important point about scarring as a macroeconomist is this is scarring that is going to be very painful in some parts of the economy, but it's not hitting the financial sector. It's not reflecting an overhang of housing or CapEx. It's not hitting major EM economies. This is not going to hurt the macroeconomy the way the scarring after the global financial crisis did. So recognize scarring, but recognize it's not the same kind of macro driver of either growth or inflation going forward.
Bruce, I know you took a call from James Dimon yesterday afternoon. He was sort of thinking about 2021 and forward. Let me ask the same question Jamie Dimon asked you. Do the wealthy escape higher taxes? Do you just assume if we get the tax policy we're talking about, that the fancy people somehow escape the tax burden?
Well, I think taxes need to go up if we're going to be financing this infrastructure bill and other things. And it's built into our forecast that there is an increase in taxes. I do think we should understand that against the backdrop of what we're seeing in terms of wealth gains, against the backdrop of what we're seeing in terms of the economy overall, that's not going to be a near-term drag on the economy. We can have a long debate about where the optimal level of taxation is, but I don't think either on the CapEx side from higher corporate taxes or on the household side that tax increases in the next year or two are going to be a drag for this economy.
Hey, Bruce, always good to catch up. Good to catch up this Monday morning. Bruce Kassman there of JP Morgan, setting you up for the week ahead with payrolls Friday just around the corner. Your median estimate 978,000 on payrolls in America for the month of April. Unemployment, the median estimate set to come down to 5.7 from 6%. Tom, Morgan Stanley, we talked about them a little bit over the last few weeks. 1.25 million is their estimate for the headline number, and unemployment to drop from 6 to 5.6. The improvement's one thing. How quickly it's happened over the last 9 months. Phenomenal.
Well, it's going to, and again, it's replacement of what we saw, the carnage that was out there. But, you see a healing economy is all. You see it in baseball stadiums, John, where we're starting to see 10,000 and 15,000 people there. I saw the tots yesterday, and, Lisa mentions a K-shaped recovery, and, it was a Gareth-shaped recovery
yesterday. It took 11 minutes to mention Gareth. Lisa, I'm shocked.
Dr. O'Larian's on, going back and forth with me from Cambridge over